Once again, good morning, everyone. It's good afternoon. Good afternoon, everyone. I'm Peter Chege from AIB Access Africa, Head of Product Development and Innovations. So today we are on NSE share trading. Day 3. We have done previous trainings. I think this should be day 4, not day 3. All the previous videos I've already uploaded on YouTube channel. Not AIB Access YouTube channel. It's a separate YouTube channel. On AIB Access, you will see research and also a few videos on platform, the way it works. The reason why I've uploaded on that channel, these videos are too long for our YouTube channel. So today we are going through building wealth at NSE, the strategies you can use, how psychology plays in making profits or losses, and how you can pass now your wealth to your beneficiaries and make sure they benefit from it. So we will start with the first one, which is a dividend strategy. So what is a dividend strategy? It is using your stocks, which gives you dividend, to reinvest again and grow your wealth. So the way it works, when you receive your dividend, instead of using it, you reinvest back, or you rotate into another product. In NSE, when you buy shares which issue dividend, on payment day, that dividend is sent to you as the investor, directly to you, either to your bank or to M-Pesa. So instead of using that dividend maybe for your other purposes, you can return it back to your account, that is AIB stock trading account. Then you buy more shares. And there are two powerful strategies you can use. One of them is called dividend recycling, and the other one is dividend calendar rotation. So we start with dividend recycling. This is turning dividend into new income. Remember, when you receive your dividend, you have two options. Either you use that dividend to pay your other expenses, or you return it back to your trading account and buy more shares, which give you more income in two ways. You can either decide to buy dividend stocks, so that you're using a dividend to buy another dividend, or to buy growth stock. That is, you're using your dividend to buy a stock that will appreciate in price maybe in future. Then you can sell and realize your capital gains. So dividend recycling is investing your dividend into other dividend paying stocks or high growth stocks. High growth stocks are the ones that you buy at a lower price, then you sell at a high price. Remember, for capital gains, you must sell shares to realize that profit. For dividend stocks, you don't need to sell because you're receiving dividend directly without having to sell your shares. That's why AIB Access, you see us recommending shares that issue dividend. So let's take an example. You receive a dividend. Like now, Umeme just closed their book closure was on Monday 14th. You receive your dividend on 31st July. If you receive your dividend that same day, for those people who already have M-Pesa, most of them, they might receive that day. For bank, you receive the following working day. For M-Pesa, they usually said as batches. So you find there are those who will receive on 31st, and there are others who will receive after that, maybe within 1 week. Though it should not take more than 1 week, even for banks. If it takes more than 1 week, know that you have an issue with your account. That is, the bank account you gave or the M-Pesa number that you gave is not registered to your ID number. So when you receive on 31st, for Umeme, you don't use it to pay maybe your bills or for entertainment. You just trade it back and buy Safaricom. Remember, Safaricom book closure is on 31st July. That is the day you need to have shares. So you use that money to buy Safaricom shares. Then in August, payment day, you receive now another dividend from Safaricom. So already you have two dividends. One from Umeme, which you used to buy Safaricom shares. So I hope that is clear. So you receive a dividend from company A, then you use that money to buy shares in company B, which is also giving dividend. And remember, when you are buying dividend stocks, always check dividend yield. That is your dividend divided by the current price of the share times 100. It's usually a percentage. So you usually look for high dividend yield. I will show you in Excel how you calculate that once we are done with theory. So here you are creating a compound income loop over time. You see the way compound interest works, where if let's take an example, pension. Those are for us who contribute pension. And pension here, I'm not talking about NSSF. I'm talking about a separate pension. Maybe you have a pension scheme or pension plan with a pension provider. If you deposit money today, let's say you deposit 1,000 this month, next month 1,000. The way the interest works is that for this month, it will be calculated for the remaining months in the year. So you run for 5 months. Then for the next month, again, they will do the same. At the end of the year, when you're rolling up now to the new financial year, now from 2025 to 2026, they take the full amount plus interest that you have earned this year and reinvest again, and it earns interest. It's the same thing you are doing here with dividend. You have bought shares, you have received a dividend. You return that dividend back and buy shares that give you another dividend. Over time, you grow your wealth. So an example, let's say BAT pays you a dividend, let's say of 2,000. You have received it in your bank or M-Pesa. Instead of you withdrawing it, you can return it back, deposit back through either M-Pesa, or if you're from bank, you can either do mobile banking, or you just do a transfer, RTGS or EFT, or you withdraw to M-Pesa, then deposit. Remember, M-Pesa is real time. If you're depositing from bank, you need to send us that confirmation slip or confirmation message from the bank. So you'll deposit back, then you go to corporate actions, check which share is issuing dividend next, and they have not closed the books. Let's say you have received your dividend today. If there is a share that is closing their books today or for the next few days, you can deposit that money back and buy that share, and don't sell until book closure. Again, you receive another dividend. And we highly discourage buying dividend stocks, then you sell. Why? Next year, the same counter will issue another dividend. So you are saying it's like buying a shamba that's giving you good returns. When you plant good crops, then you sell at a high profit, then you go and sell that rad. What are you doing? You are selling a rad that is profitable to you. It's the same thing when you sell dividend stocks. Unless it is on emergency, never sell a dividend stock. What you usually do, check in your portfolio. If you have shares that have never given you dividend, check whether they have made profit. If they have made profit, hold those. If, however, they have not given you dividend, you can decide, yes, I'll sell my dividend stocks, a portion of it, but once I get money, I buy back. You don't want to lose on a dividend stock. So again, you buy cooperative shares just before their book closure. And don't sell. If you want to sell, sell after book closure. But what happens, like what happened with Umeme, on ex dividend date, that's one day after book closure, you find prices go down. And why? Because that time market is open. Huh? When you're placing order, there is that range you're given. It is usually 10% rule. Huh? Ex-dividend date, that same day, like yesterday, you could put any price for umeme up to the highest for the sell side. Huh? You could put any price, including 1 shilling. And that's why in ex-dividend dates, we usually tell you don't place market orders. Because if somebody have put maybe the lowest, maybe they are the ones on the buy side, they have put 1 shilling, but the sell side, they have put 30, 40, 50. You come and put a sale order to execute on market, you definitely sell your share at 1 bob. Remember market price, you are saying, sell my shares at available price. It will go and pick that 1 bob. That's why on ex-dividend date, never put a market order. Even if you're buying, you can buy a share at a very expensive price, then it goes down. Remember that day, as investors, we usually panic that the price will go down, I'll be rocked. You come to psychology in the market, how it plays, and you end up making either profit or loss. You panic, you want all of you to sell. You push prices down. Like what happened yesterday with umeme. I know there are people who sold even at 11, even below that. Because of panicking, you want to sell your order immediately on book Russia, yet you don't know that day there is no limit in prices. We always discourage selling immediately. If you have to sell, just watch the first day how it works. Then the second day, that time 10% rule applies. Check where the price is. If there is more demand than supply, the prices will likely go up. If there is more supply than demand, remember you're willing to sell, you push prices down. Mostly it is, as investors, when we panic, we want all of us to sell. Then you find on demand side, they usually withhold shares and prices go down. You give it some time, usually it will readjust back. Remember for the first, if you look, on Monday it was around 22, the trade around 22. If you minus the dividend 8, it's 14, the current price right now. So it usually readjusts with the dividend. Then after some time, it might go up, or if market is against it, it will go down. So now you have bought shares that will issue the next dividend. You receive that now dividend. You have already received from BAT, and you have a dividend from Co-op. Remember for BAT, you bought Co-op. Now when you receive Co-op's dividend, you go back. Maybe now Safaricom is issuing dividend, you buy with that dividend you received from Co-op. That way now you can create a cycle, and what you are doing, you are actually preparing yourself in future to be receiving maybe dividends either quarterly or monthly, because these are shares that you usually declare dividends and payment days different. You might find every month you are getting some income through dividend. And at some point, you even not rely on your salary, you'll be relying now on dividend to pay your bills. Then you use your salary now to expand in other investment. So the advantages of this, you build multiple income streams by getting these dividends daily. Remember, you already have your current income stream. You're adding now dividend as another income stream. And if they are buying counters that issue dividend regularly, it means in a year, maybe it's only 2 months, maybe you not receive dividend. Maybe there is no share that I've declared to pay that month. Then the other one is compounding your wealth on long term. By the time you are retiring, or by the time you decide now I want to offload my shares, you have built a good portfolio. Or if you're passing over to your beneficiaries, then they have something now to support them now in their investment. Then it keeps your money active in the market. Remember, when you put your money in M-Pesa or in bank, just the normal account, regular account, doesn't earn you interest at all. But now here you have put money somewhere, it's making money for you. Then there is a dividend calendar rotation. It requires smart timing for the payouts. Just like what I've just said, you are planning, you are buying and selling around dividend declaration and payments. Remember the other one we have just talked here. Sorry. Dividend recycling, you are checking at the next dividend you have received. Then what is the next dividend? Dividend calendar rotation is where you are planning in advance. You already have corporate actions on NSE price list. So you already know Safaricom book closure is on this day, they will pay us on this day, and this is the amount that I will receive. Within the same corporate actions, you have, let's say, KPLC, they have declared their dividend after Safaricom, and their payment day now is after even the payment day for Safaricom. So you can decide, I will use Safaricom dividend to buy KPLC. Then there is another counter within that, let's say, a counter like Equity, which have a dividend book closure is in between our Safaricom and KPLC, but their payment day is after KPLC. Remember, you can't use that dividend for Equity to buy KPLC because payment day is after. We have said for let's say National Media, payment day is after book closure for KPLC. So you use the first dividend to buy KPLC, then you decide the next dividend, what do I use to buy? If there is no dividend that is declared, then you go to historical prices. You go maybe to our price list for last year, maybe the next month, July, that is August or September. You check, is there a counter that gave dividend that time? There is a likelihood that this year it might give. You just check their performance. If they are making profit, then their likelihood they will issue dividend. So you can decide now, this dividend which I can't use to buy KPLC, let me buy the next counter in anticipation they will pay dividend. So you are using corporate action to create a dividend calendar rotation, where you are aligning each dividend and what to buy. We are coming to that in Excel so that it becomes clear. So the way it works, you study NSE dividend calendar to know when each company closes books. You don't need to go to NSE website. NSE price list on our website, Equities price list, I will show you where it is. It has all the details. That's the only thing you need, in Excel or spreadsheet. Or if you're doing off the laptop, you can decide to write on a book. You just buy a small notebook and note down all the shares, book closure, payment day, dividend amount, and the number of shares. If you're not starting, if you already have the shares and the number of shares you have. So the next thing is to invest before book closure to qualify for the next dividend. So for you to receive a dividend, you need to have the shares at the book closure. Then you rotate this dividend into the next company after receiving your payment. Immediately you receive by another counter that have declared dividend, and book closure is maybe in the next month or next week. And I want to clarify the way dividend works at NSE. It's not the same way dividends or interest works in SACCO. I know most of us, we have SACCOs we have joined. They usually have share capital and also your deposits. Remember, for a SACCO, deposit will earn interest on not at the end of the year, not the total. They earn based on when you deposited. If you have deposited this month, July, that deposit will earn interest up to December for those months. If you deposit in August, it will earn from August all the way to December. Why? Because that money have been invested by that SACCO that month. That's why you are starting that month all the way to the remaining months. Then at the end of the year, they take the whole amount you have, reinvest again, then it will earn interest from January to December. Then the other deposit you do the other months, now they earn for the remaining months. In NSE, it is different. It is the total number of shares you have at book closure. It's the one you multiply by dividend amount. So you don't need to prorate it, no. Book closure 5 p.m. Take your portfolio valuation, the total number of shares times the dividend amount. That's what you receive. It's that easy. So a good example, like in March, you buy a Chege before book closure, which now you receive dividend, let's say in May. Then in May, Absa declared a dividend which will be paid in June. So you're using Chege dividend to buy Absa. Then when Absa pays you in June, maybe that month, end of that month, Stanbic have announced dividend. Buy there now, Stanbic. They will pay you in August, and you continue like that. You are using your dividend to grow your portfolio. So the benefits, one of them is a frequent dividend payment across the year, as I've said previously. Remember, you're staggering your dividend payments. You have stocks paying you dividends maybe after every few months. So this is a regular income, free, because you're not selling your shares. The only thing that is deducted is withholding tax. Then more consistent passive income, because this will just be coming to you regularly, as and when those companies declare dividends. Then utilize capital rotation without long-term locking. So let's go to how you now create this in Excel and you're able to track. So there are two tools you need, Excel spreadsheet and NSE price list. If you don't have a computer, instead of Excel, you can use just a plain paper or a book. Let me stop sharing. We go now to, first of all, where you get that information from. And if you have any question, you put on the chat. Let me also open the Excel. It's a simple Excel worksheet, but I will share it now where you can fill in the details based on what you're targeting in the market. So let me share our website. Share. If you have any question, put on the chat. Where is it? It's here. So you go to our website, AIB Access Africa, you go to research, then price list. So research, price list. You look for equity price list. Like this is for yesterday, the one I've highlighted. So you look for equity price list. There are many, every day we put, as long as it is a working day, because that's when market is open. You just open. You know these prices, because these you already have it in DigiTrader or online portal, so you don't need to worry about these. The prices you already have in DigiTrader. The only thing you need to check, like, is this column, I don't know what, trading status, where there is XD, it means X dividend data. So that share is trading X dividend. Let's go here, corporate actions. As we have said before, when a counter declares dividend, it has to be added in price list under corporate actions by NSE. This is subject to approval by the regulator. Once the regulator have approved NSE, they put it under corporate actions, circulated through brokers and also their website. So the corporate action, you have the share that have declared dividend, the amount of dividend you receive, the date they announced. So the first date is the date the announcement was made. Then there is book closure, is the date that dividend is the date register will be closed for that share by the registrar. and the investors who already have shares qualify for the dividend. So at around 5 p.m., once books are balanced, the total number of shares you have on book closure is what qualifies for dividend. Then payment day is the day you'll be paid your dividend. So we only need from this worksheet the name of the share, dividend amount, book closure, and payment day, because those are what we'll be tracking. So that is on price list. Let me stop sharing this. We go now to our Excel. So let's go back to the Excel. So I'll be dealing with the dividend selector and the investment, because those are the two you need for now. The rest will go next week. That is the ones that are dealing with portfolio. I don't want to take much of the time today, and I also want you to go and practice with the Excel so that you understand how you can track your dividend. So what you need is the company in column A, the company that have declared dividend. Then you have book closure. As we have said, book closure is the date you need to have shares. So you need to track that day. Then payment day, you need to know when you'll be paid. Then how much you'll be paid per share. That is dividend per share. Then current price of the share. You may want to buy. So you need the current trading price. These are just the example. I will clear, then we do it practically. Then dividend yield. Remember, dividend yield is the dividend per share divided by market price. So you get it as a percentage. Then the higher the dividend yield, the higher the returns from that stock compared to the rest. Then here you have the amount you would want to invest. I'm assuming maybe you're new in the market, you don't know how much you want to put into each stock. So you may need that column so that you track how much you can put in. Then the number of shares you can buy. We will come to that because number of shares will be dictated by amount that you invest divided by the price. Then once you get the number of shares, you already have the dividend. You can get the total dividend that you can get. Why do you need this? You need this because in the next worksheet, NSE reinvestment, then let me expand these columns. Then I zoom in. Let me just expand. And then zoom in so that it's visible to you. So you have dates in the company that you want to buy a share. Then the dividend per share. So you need to know the dividend that you receive. So the first one is where you are selecting the share you want to invest. Then the second one is where now you are making the actual decision. These are the shares. So the shares that you put here are the shares that you buy. You give even book closure and the payment date. And the shares, the number of shares that either you have currently, or if you're buying the new shares you own, or if you already have and you're buying more, now the total shares that you own, so that now you can compute the total dividend that you receive. After that, remember in the dividend selector, you're even selecting the next stock that you will target after receiving dividend. So you put your target stock, the next one, and their book closure, the dividend, and estimated number of shares you can buy. Let me just use that, but now the lines won't be visible. But this for me to explain. So this side up to G, the one that I've highlighted, these are the shares that you buy. Then the next part from H to the N are the shares that you buy using the dividend paid by this company. We will come to this so that it is clear. Let me remove the background color so that when we come back it is clear. Let's go to dividend selector. Let me even clear these. I won't open NSE price list because I want to be quick on these. I won't share NSE price list, but I'll be reading through. So we already have the ones which will be paying. We have Captura. So the company is capture. So just use a short form. In the interest of time, then we have a book closure. This is already closed. No, it has not closed. This on 31st July. Then payment day is 2nd September. Dividend amount is 25. I'm just filling in. I'll just do a few. We'll come to price. This one you can get from DigiTrader. Then we have dividend yield. Let me just check the price for Captura quickly. I'll pick yesterday's price. Captura. It's around 325. So price is 325. So our dividend yield is a dividend. So I'm just putting in the formula. Dividend divided by market price. And I can put this to 2 decimal places. Or just 3 are enough. Then we leave these two. We'll come to that. Then we pick the next one. I'll just pick a few just to explain these. All these are closing books on. Most of these they have already closed, but let me pick Umeme because that dividend is coming in. Book closure was 14th July. Then payment is 31st July. Then dividend per share, we converted Uganda shillings to that. Current price is around, I'll pick 14. So dividend yield is 8 divided by 14. Sorry, I picked the wrong cell. 14, then these I can put to 2 decimals, 3 decimals. Then we come to Safaricom, Escom. Book closure is on, Escom is on 31st July. Then payment is 31st August. Then dividend per share, and this is final. They have already paid interim and I think special dividend. Current price of Safaricom, let me quickly take it, 25. I'm just using a round of figures, but you use the correct figure because these it will determine how much you can earn from the dividend. So we have 0.26. Then I can take one more. Hopefully we have another share we can use, whichever book closure maybe, or payment day. All these they are paying on 31st. Nairobi Securities. I'm trying to pick another account I can use. Umeme Kenyari. Most of these they have closed. I think it's only those two. There is a Williamson. Book closure is subject to approval. I'm just using short form. Payment day is also subject to approval. Dividend, no, it's not. It's, I think for Williamson T is different. There is bonus issue. So they are giving additional shares 1-to-1. For every one share, you get an additional share. I will come to that. Actually, I need to explain on a bonus issue because there are two, Capturity and Williamson. But let me first work on dividend. It's 10 shillings. Sorry. So book closure for Williamson is still on 31st July. Payment day 2nd September. Then dividend is 10. Amount, the price for Williamson is 241. Then their dividend yield now is that. So to 3 decimal places. So as you can see from this Excel, dividend yield, the one that I've highlighted, let me put it in bold. You can see there are different values. We have, if we are to arrange these, let me just arrange quickly so that we go to sort data, and we are sorting with column F, dividend yield, largest to smallest. You notice Umeme have the highest dividend yield. So you're getting more returns for the price you pay for it, but these have already closed. Then you have Captura as next, giving you a 0.07, 0.78, the other one 0.04, the other one 0.03. So when you're investing, the first thing you check is the dividend yield. What are your returns? If Umeme had not closed books, and assuming the issue they have with Uganda government is not there, you would go for Umeme because you have high returns. You're getting higher dividend returns for the cost you pay. That is on the dividend yield. So let's say I had 100,000. This is just for example. For shares you can buy from even 100 bob or even lower, depending on the number of shares you are buying. Let's assume this is the amount I have across that I want to invest in. How many shares would I buy? It would be the amount to invest, you divide by price, and again, factor cost. So here, so number of shares would be tentatively around 7,000. So let me drag this formula down. Then let me remove decimals. So you notice with my 100,000 here, I have different scenarios. Let me remove commas here, decimals. Like for Umeme, I can buy 7,000 shares. If it is Captura and Williamson, notice the shares goes down. Then Safaricom, again shares goes up. It's me to make decision. Which shares do I buy? First of all, looking at dividend yield, yes, Umeme, Captura, Williamson, they have a higher dividend yield than Safaricom. But in terms of dividend, in terms of number of shares, which would you go for? Would you go for 7,000, 4,000, or the 3,400? So you come and do total dividend. Total dividend now will be total number of shares you can buy times the dividend. This is the amount you receive. And again, these figures are just flat figures. It's not the final figure. Remember, they are withholding tax. This just is an example. Let's remove the decimals. We remove decimals so that it is clear. Notice, for Umeme, I could receive a higher dividend of 57,000 compared to the rest. Again, assuming there is no that issue of Uganda government. That means Umeme will still continue listing in future. Would you go for Safaricom or would you go for Umeme? Again, it's all about returns. The returns that you get. And also, you check what is the future of that company. If I was to give you this Excel, the way it is, you'd run for Umeme. But does it have issues? We already know there is an issue they are still following up with Uganda government. Hopefully that can be resolved and Either it continues to list, depending on the outcome of the court case. If they have other investment they are doing outside Uganda government, they can still continue listing. But CMA will give guidelines. Now, umeme is already passed. You only have Kapchora, Williamson, Safaricom. Notice their book closure, that's why you needed it. It's today we are in 16th July. We want to decide which shares do you want to buy. For Safaricom, book closure, is on 2nd September. So this is from NSE price list. So I would come to NSE, let's say I had bought umeme, I would come to my reinvestment. The date, maybe I would be buying umeme, that was before book closure. Let's say it was 12th July, because they had not closed books. I'm buying umeme. Then dividend per share is 8 bobo. We already have it. Then book closure and payment day, we already have them here. Book closure. I paste those two. The number of shares I will have is around 7,000. So that's what you're tracking. And I'll tell you why you need these Excel worksheets. So this is not a date, this is supposed to be a figure. 7,000. Total dividend I will receive is around 57,000. Let me round it off just for argument's sake. Let me put in commas, remove these. So you already have your umeme in your portfolio. So what you are doing in the first columns, let me highlight this part now. Don't know how I can put it. Let me use those. I hope you can see now the cells. Let me put them in bold, hopefully, so that we split into two. We have this side. Let me put color code here so that it can be clear on your side. We have the side with black and we have the side with red. Let me put just another color like red, and even put a split here. Insert an empty. Then this one I can give it, let's say, green, so that we have two sides. We have the shares that you have on the black side, and you have the next target stock. You already have umeme. You know you have dividend is 8 Kenya shillings. Book closure was on this day. Payment date is on this. And you have this number of shares and the total dividend. You want to target the next share to buy with the 57,000. We go back to our dividend selector and you highlight umeme in, let's say, green. You've already picked it up. So you have a selection between Kapchora, Williamson, and Safaricom. Let me check whether there is any query on, maybe it's not visible. Okay, I will share this Excel worksheet with now the shares that are active with the dividend. And I will also do a blog post now explaining this. I will also share this video so that you can reference what I'm doing. And if you have any question, you can always call me. If it is working day, I can call you back from the office. If it's a weekend, you can either call or call on WhatsApp so that we also maximize on cost. I don't want you to incur cost. So we have already booked on our NSE investment that we already have umeme shares. And dividend is 57,000. So you want to target the next counter. Is it Kapchora, Williamson, or Sap? Again, you come to the amount invested. Now we reduce it because we have already invested our 100,000. The next amount we are expecting is the dividend that will be paid on 31st July. Hopefully, I wish this, I can change this for argument's sake. Let's say it is on 2nd August, so that it is clear to you. But this is not what you find in a price list. It's that 1st July. The reason is because of that timeline between payment. If it is you are receiving via bank, remember you can't receive on that 1st July. It will come on the 2nd working day. That would be on, let me check. 1st of August is on Friday, either Friday or the next week after, from 4th to 9th. So let's just use this as another, for argument's sake. So we receive our umeme on that 1st July, but we need to reinvest our dividend back. So we have our 50,000. This is not 30,000, it is 50,000. We need to know which is our next stock. Maybe you have added more stocks before this date. Remember, we still have how many more days up to 31st? We have 2 more weeks. Other counters may declare, so you add them down here. Calculate their dividend yield, again arranged by dividend yield, so that you know which counters are likely to give you higher dividend when you are selecting. So we have a choice of Kapchora, Williamson, or Safaricom. Which do you go for? Again, even if dividend yield are high, how much are we receiving at the end? For Kapchora, we receive 3,000. Williamson is 2,000. Safaricom is 1,000. So which one do you take? Again, number of shares you can buy. We come to this side. Safaricom will receive 2,000. We can buy with the 50,000. We can buy 2,000 shares. Williamson is only 200 shares. Then Kapchora is around 154. If you are short-term seller, buyer, it means you want to sell. Let's see how much we can receive if you are to sell after book closure. Again, this I don't want to make assumption. I think I will add another column for target price, because you need target price if you are short-term seller. But I assume everybody who have come in here, you are a long-term investor who is not looking to sell dividend stocks. So for Kapchora, the number of shares we can buy is around 154. Remember, you can buy 100 in the normal lot, then the 54 you buy at the ODD. So for me, I would look at company performance. Kapchora and Williamson Tea, these are agriculture. Safaricom, they usually give 3 dividends, as I said. One around the first half of the year, usually around March. Then there is another one they usually pay in between, before July, then the final dividend. Would I go for Williamson and Kapchora and leave Safaricom for next year dividend? Even if their dividend are high, let me just check Kapchora whether it is final dividend. Kapchora and Williamson T is first and final. It means they didn't give another dividend before. That is this financial year. They have not given another dividend. But Safaricom, they had a special dividend. So for me, I would go for Safaricom, because next year in January, I will receive around March, I will receive another dividend from Safaricom. And if they be giving a special dividend, I will also receive a final dividend. So I would quickly pick Safaricom and ignore Kapchora. Kapchora and Williamson T, I would use now my pocket money to buy these stocks, maybe in small lots. Come to NSE Reinvestment, and next target company, I would write Safaricom. What is their book closure and payment day? I'll just pick it from here. If it's not clear, I'll come and explain once I'm done with explaining these. I will do a recap so that it is clear. Then estimated shares, we go back to our dividend selector. I already have 2,000. Remember on this, the side with red, I have not put the dividend amount that I will expect to receive. Why? Remember, these are your next target companies. You have not bought. What you have bought is what is on the black side. Let me remove the color codes so that now it is clear. Let me remove black. I hope now the black and red is clear. Let me first remove them so that I can expand this Excel further. Let me remove this. So we already have umeme. We are expecting to be paid on 31st, 57,000. When that 57,000 comes on 31st July, I will not use that amount. I will quickly go to the next target that after the share I've targeted with that dividend and buy it that same day. Why? If you wait to buy Safaricom at the close of books, that is around 2nd August, prices will have gone up. So immediately my phone, I get that message from M-Pesa. I'll deposit the same day. Go to DigiTrader, check Safaricom. How much is Safaricom? So now we assume the date here we had written 16 July is that 31st July. So we assume today is 31st July. So I've received my dividend. So which share am I buying? 31st July. So this is the date. I'll come and buy Safaricom. Dividend for Safaricom, it is here in the dividend selector. I don't need to struggle, 0.65. Book closure and payment day, again, they are just here, you just copy. Then the number of shares, you already have it at the here, there, if I'm not wrong, yeah, 2,000 shares. And this is a total dividend. This was supposed to be formula. So this times, that is the dividend amount, times the number of shares. Sorry, something is off. Let me undo. Something is off. Let me just check, compare here. Oh, it is not 700, it's 7,000. Huh? So make sure all these formulas, when I share, don't remove the formulas. Huh? So I drag down. Let me put these rest decimals, sorry. So on 2nd September, I'll be expecting dividend from Safaricom around 1,300. But remember, we are tracking dividend here. When you're buying the next counter, you will return 1,300 plus an extra money from your pocket. Remember, you're also beefing up. Even the Safaricom that we are buying here, the 2,000, you're just assuming you're buying from dividend. You can also add more from your pocket. Or if you have more shares, you just add. Because you're adding, whatever you're buying, you're adding on top of Safaricom shares. Now, let's come to totals. We do a total here so that I explain why I'm doing this Excel. So here we have total. And what are we tracking at the total? Let me put in a board. We are only interested in total dividend you have received. Remember, for the target side, you don't need to track dividend. You have not bought. We are tracking on the left side of the color green because those are the shares that are giving you. You have bought using your dividend. Why is this? Remember, in DigiTrader, we never show you the dividend amount you have received from your shares. that you have to do separately. So you will never know whether you're making profit or loss in the market if you're not factoring your dividend. So when you're doing your portfolio, that's why I said these are the screens, I will come to them next week. You need to factor the capital gains if you are to sell. If you are to sell, let's say, let's go back to dividends reinvestment. If I was to sell Safaricom today, my 2,000, it will be equals 2,000 times current price. Let's give it 25. So I'll receive this 50,000. Assuming I bought these shares at our 57. So the difference is my sales minus that. So it looks like I've made a loss, but remember there was a dividend. So if my dividend was higher, then it would come in and foot in the loss. Why am I saying this? Whomever just closed their books, prices went down. They refactored with dividend amount. It's called dividend dilution. It happens on next dividend date where prices go down by dividend price. Like Safaricom, when they close their books on 31st July, on 1st of August, the price will go down with this margin. Then there will be that that day, there will be no limit in price. It can trade from 1 shilling all the way to the highest price. It's called open day. Then the following day, you go back to the 10% rule. So you need to know whether you're making profit with dividends. Remember, this is never tracked anywhere. It is you to track off the system. That's why you need an Excel. That's why you need an Excel worksheet or that you can use to track your dividend. And remember, this Excel is helping you to know your next target company. Let's go to dividend selector. We have taken Safaricom. Green. For argument, sorry, let me return to black. It's only that NSE, they don't have many shares that are issuing dividend. I would have done a practical, and that's why I need to check the previous one, then I can fill it for you. Let's assume Williamson and Captura, their book Rocha maybe is on 15th September, and this is on 30th September. Again, on 2nd September, we are receiving dividend for Safaricom. We have seen the amount is 1,300, but remember, you could be having additional shares. Remember, you are paid lump sum amount. So I have to decide, do I buy Captura or Williamson? So I'll need to check this, let's say 11th November payment, no, 28th September, then here we have payment day, we can say maybe in November. So I have an option to pick Captura or Williamson, but remember, I need to check on the payment day. Captura dividend will be paid before book closure for Williamson. So I can pick Captura first, buy with a dividend from Safaricom. Then when I get Williamson dividend, once I get Captura dividend, I can buy Williamson. Let's go to reinvestment worksheet. So the next target after Safaricom dividend, we have said is Captura, because of payment day. You are checking on the payment day. You compare with the other stocks which are listed here, book closure, we see which one is ahead. That is, you receive payment and use that payment to buy shares. So Captura payment day is on 28th, but book closure for Williamson is 30th September. So I can pick Captura, copy. I won't fill the details because of time. I don't want to take time today. Safaricom, so I will use Captura and fill in the details. It's my next target. So when I receive my dividend for Kapchorwa, it will come at around 28th September. So 28th September is when our Kapchorwa will be in my Kapchorwa, in my portfolio, then with the details. The dividend that I will receive, the next target we have said will be, now I will come and select from stocks, Williamson T. Then feed in the details. Why am I doing this? With this Excel spreadsheet, there are times you find there are so many companies that have declared dividends in NSE price list. So you feed all of them here. Then using this reinvestment, you are tracking which dividend can I use to buy the next share. If it is Umeme, I'll track to buy Safaricom. Then when I receive Safaricom, I automatically know I'll buy Kapchorwa. When I get Kapchorwa, I know automatically I'll buy Williamson T. So basically, what are you doing? You are scheduling your dividend so that when you get your dividend immediately, you don't need to struggle to know which share to buy. You just come to your Excel worksheet. When I receive Safaricom, which is my next target company, straight, you go and buy those shares. If you have extra cash now in your pocket, which you are depositing, you can use that now to buy shares that have been recommended by our research team, or shares that are not with, or shares that are outside our target companies. Remember, in dividend selector, once you feed in with colors, there are those that will be left without any target dividend to buy them. Now you can use your dividend to buy those. You can use not your dividend, you can use now your extra cash to buy those shares. That way, you build now your portfolio using both your cash and dividend, and you never miss a dividend in the day. Why? Remember, you have picked the green with a dividend. The others which have not been highlighted, you are using your pocket to buy. So it means you are creating a dividend portfolio. A dividend portfolio is a portfolio that have shares that will give you dividends. So let me stop sharing this. I will share now the full worksheet with the stocks that have declared dividend so that it is clear for you. And for those who are asking for the video, I'll be sharing everything. Just join WhatsApp channel. I'll share a link for that where you can join. That's why I usually share everything, including additional materials that are not accessible from our website. Just extra running materials that you'll not find on our website. Let me just pick a few questions before, because the rest are more of theory. How can I get dividend on M-Pesa instead of bank? Can I be able to reset that? Just on this presentation, you have my email address. Just set that request, or you said to this email address, feedback. I'm just sharing that email address on chat. Just said your ID number or CDSE number to that email requesting for forms to change dividend. Unfortunately, it's a manual process where you need to fill in a CDSE 1 form and sign, then you scan and send to us. Then we just instruct CDSE to update your dividend mode from bank to M-Pesa, and make sure the number that you include in that form is registered under your ID. So the number that you are giving is registered under your ID. Otherwise, they might fail to pay you if number is not registered to you. So that process is a bit manual, and hopefully CDSE in future can automate. Because on our side, it will be straight through. So you just update for any changes in CDSE. You need to fill in that manual form. I will share the Excel spreadsheet. Don't worry. What is the risk when using that approach? If you're using dividend approach, there is no risk because dividend is free money you are receiving, and you are not selling your shares. Remember, you have not sold your shares. It's free cash you are receiving. Then you are investing back. So this profit you are investing back to get another profit. Again, when you get that profit, you are investing back to get another profit. The only risk would be if you're using dividend to buy a stock that doesn't give you dividend. Unless that stock appreciates in price and you sell, I repeat again, you sell. Because that's the only time you realize actual cash, when you sell. If you don't sell, remember the price can continue going up, then one day it goes below even the price that you bought at. If you sell at a lower price, then you'll be losing. So for stocks that don't give you dividend, if you have made gains and you have seen it has stagnated for some time, actually don't even wait for prices to go up again. Just sell. You have your gains, buy a dividend stock. Dividend stocks, never sell them. The shares that you see at the corporate actions, never sell them. Let me see. How do I change my broker and use your account? Paris, you only need to go to our DigiTrader app, AIB DigiTrader, or our online portal and open an account. Just click open new trading account. You submit your details. Where it says, do you have an account with another CDA? Click yes, put in your CDSC number, because you will not be opening another CDSC account. It's the same one. The way CDSC works, you only have one CDSC account shared across multiple brokers. And each broker will only see the shares you have bought with them. But when you go to CDSC, they'll give you a statement now with all brokers and each broker, which shares they hold for you. So we use same ID number to open, same CDSC number you have with the other broker. So you only need to, where it says, do you have another account with another CDA? Click yes, put that CDSC number. If you can't remember, just proceed. Click no, proceed. On our side, we'll be able to see it. Only that we can't be able to see full details. The screen is okay, I hope. I will share. Actually, what I'll do, now I'll fill with the stocks that are there. I will share the Excel and the price list that I've used so that you're able to track. And also timeline for the video, because again, I don't want you to go through the whole video when you're doing practice. I'll share in details. And also join that Telegram. There is a WhatsApp channel. Let me just share here. Let me just share. If you have not joined, just join. This is a channel you're just following. Then Telegram channel where we can discuss. In case you are stuck, you can ask questions. But don't share your personal details. For personal details, just DM my number. It's there. It will be there on this presentation. If it is an issue you have with your account, just reach out directly on my number. And you can find those links here on our website. I've noticed the Telegram one didn't put as a link. Let me share. From our website, you can get them at the research. Just follow the channel. You're not joining. So that's why now I'll be sharing even instructions on how to fill in this Excel. Today it was just to take you through. If a large number of investors use this strategy, doesn't this cause a huge demand in a particular share just before book closure and could cause a significant rise in share price? No. The answer is no and yes. Why? Remember, not everyone knows how to target dividend. There are other people who come in the market with another strategy. Them, they only need to take ownership of a company. We have different investors. There are those who are coming to make money. And you find there are investors who want to take ownership of a company. Taking ownership is where you're buying shares without selling. You are just accumulating shares in millions until you become majority share. So people come with different mentality in the market, and they target some of the companies that are usually controlled by the government. So with this strategy, remember there's somebody who needs to sell their shares. There are people who don't need that dividend. They have already made their capital gains. They don't need the dividend. They will sell on book Russia, you come and buy. And actually, if there is huge demand on book Russia, it means the prices go up. So if you had bought earlier, you can actually sell the following day. But remember, we said don't sell dividend stocks. And in most cases, most of dividend stocks, they are highly liquid. Highly liquid, you find they have demand and supply. You actually don't be worried about other investors. If there is, as long as there is supply, you just buy. Remember, dividend stocks, you are just accumulating them, hold them, and don't sell. But remember, there is another investor who have made money, we want to exit. And again, I don't think it could be a large number of investors, because the market, you have all the brokers. We are around, is it 26 active brokers, each having their own clients. You also have fund managers. Remember, fund managers, they invest funds that have been given by their clients for funds to invest in various assets. They might decide to bring them in stock market. Within their own fund, there are investors who want to exit, or they have made profit, they want to exit. They'll come and float their shares. So unless there are other factors affecting market, I don't think using this strategy could cause huge demand. And again, not many brokers. I think AIBs are the only ones who do these tradings. I have not seen the other brokers do it. Can this Excel worksheet work on the phone? Yes, you have. You can install Excel from Play Store or App Store, or if you don't have, you can use Google Sheets. Actually, I'll share both versions, an Excel and a Google Sheet. But a Google Sheet, remember to save a copy on your account, because if you are doing it on the link that I will share, you'll be updating my Excel. So if you update another, Peter updates another Paul, to keep on changing. So make sure to save a copy. I'll give all the instructions on how to use it. Are we supposed to sell after book Russia or after payment? If you wish to sell your shares, remember payment is after book Russia. So for you to qualify dividend, you need to sell 1 day, from 1 day after book Russia. That is, like for Umeme, book Russia was on 14th. If you sold on 14th, you couldn't qualify for dividend. So if you wanted to sell, you don't need to sell now from yesterday 15th going forward, depending on profits you're making. Never sell a stock because prices are going down. Never, we'll come to that slide. Never sell a stock because there is a panic in the market. You sell because you want to exit, or you have a strategy. You want maybe to exit before you make huge losses by another dividend to compensate for the loss. So selling, you can do it 1 day after book closure. That means even after payment, you can sell. But remember, you have to track prices. Remember, account before payment comes in, the price will actually, you see, keeping on fluctuating. But after payment, that's when prices stabilize. Either it starts to go up or it starts to go down. But for you to receive the dividend, don't sell on book closure, but you can sell now the following day going forward, as and when you want, as long as they have settled. Remember, there is T+3. Do you have a YouTube channel where I can learn this? Yes, there is a YouTube channel. Let me just share. It's also on that WhatsApp channel and Telegram channel. If it doesn't play, let me pick that particular playlist. It's called Wealth. Let me just pick these playlists. Copy. That's the YouTube channel. That's the playlist where I'm posting everything on NSE and international markets. and other investment. I'm doing full capital markets and also other products for investment. That's why I'm not posting on AIB YouTube channel, so that you have from one channel you have all opportunities you can save your money with and make money. Is it advisable to buy stock at its peak? I hope you mean when the prices are high. If you buy when it is at its peak, then it means chances of that counter going down are high. So you might not sell in, maybe you can only do it in future if price. What you usually do, on Chege Trader there is a graph. I hope you have seen it on also online portal. For any share, always put like for the last 5 years. If it allows you 10 years, check how the counter have been performing. If the current price is the highest price, chances of going up are very minimal. The next thing it can do is to go down. But again, also check whether there are innovations that company is doing. If there are innovations or other products they are bringing in, again, that company is growing. If their profits are growing, then it means price can continue going up. So when you see a counter, even in international markets, if you're looking at those graphs, on this Friday, I will show you how to read those graphs for international markets. If you notice that price, the current price is the highest, we highly discourage buying that counter unless there is an innovation they are doing which can push the prices up. If it is at its lowest or it has gone down, that is the time to buy, because in future it will go up. You just check on the trades and also what they are doing. What would advise someone holding Umeme shares at the moment, considering what is happening in Uganda? I think there is still a court case, and I think there is some money they are still following up. Hopefully it can be crossed. The tentative time that I've been given is around 18 months. So Umeme will still be in the market until they close that case. Again, always check what CMA says. If you be paid directly by Umeme for your shares, that is, they reimburse your money, just take the amount that they pay you with, so that you don't sell and maybe the amount they are refunding is even higher than what you bought it. But again, it's a decision you make. You already receive a dividend. We have done that Excel worksheet. You only need to check how much did I use to buy Umeme and how much am I receiving dividend. If I was to sell Umeme today, how much loss would I make? You compare that with dividend. If dividend is higher than the loss, actually dispose of Umeme and buy something else that is giving you dividend to recover that difference. Because you still receive dividend, and the difference between the loss you sell at and the dividend that you received is, if it is a positive figure, it means you are still in a profit position. I will come to that. Sometimes you need to make decisions. When a counter is really making losses and prices are moving down, when do you make that decision to exit? We are coming to that. But you don't need to panic. The worst thing that can happen is for Umeme to be suspended again, and signs will be there. If you see any signal on TV or news about Umeme, just listen carefully. If there are other issues that have come up, just off-road. But check whether you have made profit depending on the dividend that you receive. But in stock market, I've never seen a client lose money. So let me pick a few. Let's proceed. Then we come back to Q&A. So I'll share these Excel spreadsheet. Then on Telegram channel, WhatsApp channel, and YouTube, I will also share instructions on how now to go through the Excel spreadsheet step by step, and how you can use it to track your stocks. Let's go to the next one, portfolio management. Remember, we have come from dividend strategy. How now you grow your wealth using dividends, using a dividend to target the next dividend. And remember, some of these stocks that are issuing dividend are also high growth stocks like Safaricom. Safaricom, if you look at their innovations they are doing and others which are in pipeline, you notice these are companies that have long-term growth. It might even at one point surpass Akina Apchora in terms of price if they continue with the innovations. And that is if M-Pesa and Safaricom are not split into two. If they are separated into two companies, remember Safaricom is the one that is listed. What does Safaricom offer? It's only data and calls and SMS. These days you can send WhatsApp. Most people are also on Telegram. You can chat. Actually, without using Safaricom, you are using Wi-Fi. You don't even your phone without that SIM card. You can call through WhatsApp without even that SIM card. Meaning what? Safaricom is mostly supported by M-Pesa. If they are to split and M-Pesa becomes their own entity and they list, I would advise you sell Safaricom by M-Pesa, because M-Pesa is the one that have the weight on Safaricom side. Again, we have said their work is just data, calling, and SMS. And the reason why I have not talked about data, you have Wi-Fi. You only use Safaricom where you don't have access to Wi-Fi. And where is it? Unless somewhere you are working, and the Matatu these days have free Wi-Fi. There are also Wi-Fi hotspots. And most restaurants, they have Wi-Fi. Homes, they have Wi-Fi. So rarely we use products from Safaricom. So I hope now you get where the strength for Safaricom comes in. It is M-Pesa. And hopefully M-Pesa can continue innovating to support Safaricom. Yes. If they innovate well and they come up with good products without copying other, because these days they are actually just copying what is happening in other sectors. If they become innovative on their own, they bring unique products, trust me, their prices will go up. So if you're buying Safaricom as a dividend stock, remember you're also buying it as a growth stocks, where you can sell later at a profit. But you don't need to sell, you see why when we come to the next slides. So we come to portfolio management. You have your portfolio. Then how do you manage it? Remember, never give your broker the role of managing your portfolio. The broker have over, like us, I think we have over 100,000 clients. We can't be able to manage each and every client's portfolio. At I come and check your portfolio, I will spend the whole week before I even advise any client on what to do with their shares. Remember, your portfolio is a basket of investment. It may have stocks which are shares. If you're investing in bonds, that's a portfolio. Money market fund, rates, Safaricom, insurance saving products. I think at the Safaricom there are other savings products. I think they also have Zindi. All those are portfolios. They are basket of investment. On broker side like AIB, you have NSE stocks, international stocks, you have bonds, and you have funds from our parent group. And the other products we are still onboarding. Hopefully by the end of this year, you have even more products. So if you do smart management of your portfolio, you reduce the risks, increase your returns, and protect your capital. Why? If you are regularly rebalancing your portfolio, you reduce your portfolio from suffering from losses. But remember, you have not lost. Even if you see you are on loss, unless you sell, you do the actual sale. If you have not sold, you have not lost. Prices will pick up. And remember, prices cannot go to zero. There is that 10% rule that protects you in our market. It's not like Forex or CFD where you can lose even your investment. In stock market, you can only make a loss. And that loss will be induced by you because you are the one doing the actual sale. If you don't sell, you don't make losses. Increasing returns. You have used your dividend to buy more dividend stocks. You have used your portfolio to see the stocks that are underperforming and they are not giving you dividend. You offload them, buy a stock that is giving you profit. You're increasing your returns, and also protects the money that you put in to invest. Remember, the worst that can happen is losing your money through losses by selling. But if you use smart management for portfolio, trust me, you will always be smiling on your portfolio, making profits because there are gains outside which you are receiving in form of dividend, and there's a capital appreciation when you sell. So for portfolio management, we come to diversification, rebalancing, and cutting losses. So you start by diversifying your portfolio. How do you do it like a professional? So diversifying your portfolio means spreading your investment across different sectors. You don't want to buy just one sector. Maybe if it is telecom, because Safaricom is at the telecom, you are concentrating your portfolio on Safaricom alone. What happens if Safaricom is affected? It means you'll be affected directly. You go to agriculture. What happens if government comes up with crazy policies which affect agriculture, and then prices start to fall down? It means your portfolio will suffer. So you want to buy different sectors to diversify your risks. And also, when you are diversifying your portfolio, you are spreading your risks. Remember, one sector, when it suffers, another sector may be gaining. Let me give you a good example, like what we had with Gen Zs, these protests. Just ask yourself, if they touched Safaricom, what would happen? And Safaricom are not able to come back to the market. It means they suffer. Your portfolio will actually decrease in price. What if you had invested in Safaricom alone? It means your risks are high. But remember, as they fight, police needs to drive those vehicles and also lorries. They need fuel. There are companies which are providing oil to them. Are they listed? Some of them, and I think there's one that will be coming in. Hopefully it will come in. So you find when one sector is suffering, another sector is gaining. That was just an example. Take another example. Finance bill comes in, interest rates go high. It means on our side, as consumers, prices will also go high. Remember, some of these companies have taken loans. They need to foot for that. Those loans, interests will go high. Then they raise their products. So you find the agricultural side may end up suffering because they are the ones providing now the goods that are being sold to us. This is just an example. But on the other side, banks are gaining because interests, their loans go high. So you find now bank sector prices have appreciated. That's why you need to diversify your portfolio. Then the type of assets, that is, you don't just buy stocks. Use portion of your money to buy shares, another one to buy bonds, another one to invest in money market fund, insurance savings plans, your retirement, remember pension. This helps you reduce exposure. Stock market can be affected very easily. Like we are going to 2027. If we go to the history of, was it 2017? Or was it 2007? It means stock market will be affected. And maybe at that point, maybe bonds have picked up. Or international markets, because international markets is not in Kenya, have picked up. And maybe at that point, you may need money. Do you sell NSE which has gone down? No. You go to international market, offload some shares. So you have a safe asset outside your political environment that can help you. So the type of assets you buy just to reduce exposure to just one side. So the benefits of diversifying, one of them, it limits losses. Because if one sector performs badly, then another one is picking up. And there are times you find interest rates are down. So you find money market fund and and boards, they are affected, but stock market maybe is up. You find stock market is affected, prices are down, but interest rates have gone up. So again, you have board and money market. It also gives you access to multiple income streams. So stocks will be giving you dividends. Money market fund boards, they give you interest. For boards, it's called coupon. The interest you get from boards is coupon. Money market fund is the interest. Remember, for stocks and boards, you're receiving that gains directly. For money market, it is posted on your account until you liquidate your fund. That is, you tell your fund manager you need to withdraw your money, or lock period expires and you need to withdraw. If it is international markets, dividend is posted on your account. You can withdraw, buy more shares. Insurance saving plan, I think there is a period that you agree with in insurance. At the wraps of that, if it is education plan, they will pay you your money plus interest. If it is retirement, that is pension, and you have gone for lump sum, on retirement day, when you decide to withdraw your money, they give you everything. If it is drawdown plan, they will pay you a portion, let's say 40% of the total accumulated amount. Then the other amount you'll be paid monthly. It's like a salary you are being paid. So you are getting multiple income streams, and remember, these are not they'll be staggered across. So the month you're not receiving dividend, maybe that is when a board is paying you interest. Maybe that's time your pension is coming in. Maybe that's time you want to sell your international stocks. So just as an example, you can decide to go for sector. Maybe in telecom, you take telecommunication sector, you take Safaricom. And Safaricom is a growth and a dividend stock. Why? Safaricom prices appreciates a lot. It's a growth stock. And again, the company itself keeps on growing. And it gives dividend. Then there is banking, KCB, ABSA, they give dividend. You can also put in equity. Stanchart, they are there. Stanbic. Then you have other manufacturing, you have BAT, ABR, and others. These are defensive dividends. They give very high dividends, but their prices are way high to be afforded. That's why it is a defensive dividend. Prices are high, but their dividend is also high. Then the energy, this Kenja, the PLC also came in. We saw some changes and prices have actually started to appreciate. It's a long-term growth stock. Then we have real estate. Then we have the global markets. Nvidia, one of very volatile stock. Before you buy, check prices where they are going. It's a stock you can gain in a day $10 or more for a share. There is Apple. There is Google. It's called Alphabet, and many other stocks, which you can make some good gains, capital gains. Remember, for international stocks, even if they are giving dividend, mostly we target capital gains, that movement in price. For international stocks, once you make enough profit, sell, buy another stock in the international. Don't withdraw that money, buy another stock in the international markets. There are also ETFs, exchange traded funds. These are funds by fund manager, which are listed to trade at a stock exchange, like the one that came in for NSE. It has most of these international stocks. But again, before you buy, check prices, price movement. For the first day, remember, people you buy with emotions. I want to buy this stock. I want to buy this ETF. Then after a few days, prices shoot down or they go up. So don't buy with emotions. First understand what is contained in it. It contains most of international market stocks, but in different portions. When you do this Friday, international markets, I'll go deeper into ETFs to show you how the stocks are listed within ETF, the percentages, because they are shown. You can see them at the website that I gave you Friday, stockanalysis.com. If you go to ETF and open one, you can see the stocks and the proportion they are listed in it. And ETFs, they are also good because you are buying many stocks as one unit. So if one stock within that unit goes up and another goes down, the net effect could be maybe minimal. You could even be making a small profit or a small loss. So ETFs, on the other side, they are good. But again, prices most of the times are usually high. As an advice, mix a dividend and growth stock to ensure you have cash flow from dividend and you're building your long-term wealth. So let's continue. So then when do you do balancing? Rebalancing your portfolio. Rebalancing is adjusting your portfolio to maintain your target allocations. Remember, there is that money you're putting in. You have said, I put 10,000 in this stock, 20,000 in this stock. What if that counter goes down? How then do you rebalance? Every quarter or 6 months or annual, or depending with the period that you put in, always check which stocks are making gains for me, which ones are not making gains. Do I offload these that are making losses and buy better stocks? If there is a major market movement, maybe a government policy comes in, it affects prices, they go down for some sector. Do you want to still hold on that stock? If you see this policy will never allow that company to come back. Like what happened with Mumias, you hold your stock and never read it, then prices go down. Immediately you notice this company is making losses and you know there is no chance of it coming back to profitability. You offload that stock, buy a dividend stock, use that dividend now to recover the loss that you made in the other account. Once you recover, don't even go back to that stock. Or when you have reached your goals and risk profile changes. That is, for goals, I didn't want to put how to do rebalancing and setting goals. I'll come to it next Wednesday because again I will have to do through Excel and it will take time. I think we are already 1:47 to 1:47 p.m. So if you are to do goals how you set them, again we can go up to tomorrow. So you set goals. You say, I'm buying Safaricom and I'll target a price of, say, when it reaches 40. I'm buying at 25. When it reaches 40, I can sell. So you just put in, you'll be buying Safaricom. You have noticed it's a good stock, it's a growth stock. When it reaches 40, you do rebalancing. Do you want to sell Safaricom at this 40 or do you still want to adjust your goals, maybe give it to 50? If you realize maybe that price has been triggered maybe by just a one-off innovation, you exit Safaricom and buy another stock. So you are just rebalancing your portfolio. Risk profile changes. Maybe you are getting into the market. When you're getting, you're not a person who can take risks. Then after some time, you're used to digit trader such that even without even checking, you can place the order and know what you're buying. That time, your risk appetite have gone up. You may need to rebalance and buy more, maybe other stocks. Maybe you have even understood how market works, how you can gain, how prices move, and you want to move from now taking those stocks that you know they are safe havens to the risky stocks, but those ones that appreciate in price. Then how do you do it? You sell some of what have grown too fast. Maybe you had put your goal when Safaricom gains by 30%, you sell it. You sell, go to another counter, maybe a dividend. Or you have said, I'll buy Safaricom. When I receive my dividend after book closure, I sell immediately before prices go down to buy another stock. But again, you may be making losses. We'll come to how trading with emotions can make you lose money. Or you can decide, let me buy more of what is lagging behind in prices, but maybe in future it can rise in price. Most of stocks which are undervalued, if you notice a stock is undervalued, that you can get from our research recommendations and research reports. If they say a stock is undervalued, maybe that is the time to buy. What they are saying is the current price is not their expectation. It should be higher than that. And always maintain a ratio, maybe 60% stocks which give dividend and 40% is growth stocks. So an example you can target, maybe you say, I will use 40% of my investment will always be on dividend stocks. Then 40% is on growth stocks. And here, remember, growth stocks could be also be international stocks. So you can say 40% I will invest in NSE dividend stocks. Then 40% I'll go for international growth stocks. Then 20% you put in money market fund or other savings. Then after 1 year, maybe your growth stocks have surpassed your target. Maybe you had set a target maybe of 50%. When they grow to 50%, I offload. You realize it's actually 60. You have already gained. Offload that now, move to another counter or another product or asset. We call them assets. Assets are stocks, bonds, money market fund, international stocks. So when then do you cut losses without emotions? The goal is to avoid holding a bad investment just because you are attached to it. Like you want to hold on to umeme because you know umeme is a Uganda product. You attached to Uganda government. You don't want to release umeme. But remember, prices are going down. Do you want to still make losses? Do you want to be rocked? A good example, Mumias. You bought Mumias, you're from Western. You're attached to that company. It's from your area. You don't want to sell. Even when prices, you don't want to sell. Or even when they're in court, you don't want to sell. Even when CMA have suspended, they have returned it back. You don't want to sell. They suspend it the second time, they return it back. Government is even trying to sell. Nobody wants to buy. You still want to be attached to Mumias, then eventually you're up. So you want to avoid bad investments just because you're attached. Again, investing with emotions. So when is the time maybe to sell? One, when company is making consistent losses and there is no dividend they are announcing and there is no signs that prices will appreciate. If company starts to make losses and prices are dipping slowly, it's time to rethink. Do I still want to hold on this stock to make losses? Exit early, buy a dividend stock, gain that dividend, compare with the amount you lost when selling this other stock. If it has compensated, then the next dividend is a profit to you. If a counter is not giving dividends, why would you want to hold on it? If prices have stagnated, if prices are not going up, how is that counter helping you? A good example, you have bought Eveready. Prices never move. They are usually below, I think, 0.5 cents. Do you still want to hold at that stock? At point, you may want to check, have I made enough gains? What are the losses if I was to sell at this point? If these losses I can buy, if I sell, the amount I will realize, if I buy another counter that is giving dividend and have a high dividend yield, can I recover my loss? If it is a yes, just move. If that counter declares different dividends, you can say, in the next 5 years, will I have recovered this amount? Yes, just move to that counter quickly. If you realize a company have governance issues, directors at the top, management, there is layoffs, those are red flags. Huh? There are audit issues. Staff have their own internal issues. They're always fighting. CEO and director are always fighting. They are also fighting shareholders. Do you want to still hold that stock? Because either way, the next thing that can happen is they go to court. Court gives issue their verdict. CMA, they come and interpret that verdict. The next thing they can do is to suspend that share until those issues are resolved. Then do you want to wait? Remember, court cases can go forever, especially when politics comes in. Then just show me any court case, unless it is a family issue, that politics are never part of it. Most of these court cases you are seeing that drag forever, politics. Change of government, others come in, they want to be heard. Other lawyers come in, they want to put in their grievances. Court case goes forever. That counter is suspended or prices go down. Remember, they are paying court fees. They are using what to pay their profit. Profit starts to decline. Or if you find a sector is affected, and maybe there are no innovations in that sector that you can foresee, prices will start coming down. Do you still want to hold at that counter? You just make a decision. What is my loss? If I was to sell this counter and realize this amount and I buy a counter that is giving dividend, how much of a dividend can I receive? Remember that Excel worksheet, you can use it to determine all these. Remember, when you come to next week, portfolio management, now using Excel, remember there are 3 Excel worksheets I didn't touch today. They all do this work, where you can make decisions and decide, is this stock worth holding? Always hold stocks that are giving you either dividend or they are appreciating in price. If they are appreciating in price, sell when you reach your target. Buy a dividend stock. And dividend stock never sell, because that is free money. A good example, a stock drops from 20 to 11 and it's not ex-dividend date. It's not like what happened with the meme. If it's not ex-dividend date and it has dropped within 6 months, no dividend in the last 2 years, do you still want to hold? You're only holding that stock using emotions that one day this counter will recover. But can it recover if losses have been crippling that company down? Prices have gone down. You only need to check, is there any tangible innovation that you can foresee they are doing? If there is none, you better sell, free that capital, reinvest in a stronger performer. And a stronger performer here, first target a dividend stock. Receive those dividends, recover the amount that you lost, then you can decide, do I want to still offload this dividend stock? Why would you offload a dividend stock? It's money you'll be losing, no? Money that you'll be receiving every now and then. No? So as a professional, always have a stop loss target. Unfortunately, on DigiTrader and Portal and NSE in general, we don't have stop loss orders. These ones you only see them in international markets. But from my side, and from product development and innovations department, this is something we'll be looking at, where you can set up a stop loss order. That means when you're placing your buy order, you can just say, if a counter drops below this price, exit automatically. But why is it not there in NSE? Because you're not losing money. Remember, your shares, it's shares that are reducing in value. You're not losing that money until you sell. When you sell, that's when you realize those losses. So in your Excel spreadsheet, you can say, my stop loss target is if 20% of my capital investment in that stock. If it goes below that, offload, buy a new stock, a dividend stock, recover from dividend, then from there, you can decide now what to do with the subsequent dividends. So again, behaviors that we need as investors, because I'm also an investor. So behavior traps that we need to avoid. One of them is anchoring, saying, I bought this share at this price. I don't sell when it is at this price. That is, you bought Safaricom, let's say, at 25 today. It goes down, then you are saying, I can only sell when it goes back to 40. It can never go to 40. Unless a magic happens. You need to first check, why did it fall to 25? From your price to the lower price. If it was an issue with the governance, Then unless they resolve that issue. And remember, this is a market. The price, yes, will appreciate, but how many years will it take? So never anchor your portfolio, rebalancing, and also management with a price that I will only sell when it reaches this price. If you have made your own gains and you have realized these are good gains, you can exit if that counter is not giving you dividend. And I insist, if it is not giving you dividend, then using hope in investing, and you're ignoring real data, you're waiting for miracles. A good example, Eveready. You can see the price is 0.2. It can entice you to buy. But what is it? Is historical price. It has been within that 0. Actually below 0.5, I think, for several years. Do you still want to buy and wait for miracle for that counter to go up? They are not doing any innovation. Just show me one innovation done by Eveready. Yet there are so many opportunities. The other counters, so many in we call them penny stocks. You find these companies, they are not innovating to spur growth that will spur these prices. And that's one issue we have in NSE. We don't blame NSE for prices. Never blame NSE, CDSE, CMA, and the broker. Prices are driven by the company itself, its performance. Then we as investors, when we start buying and selling with emotions, and that's something we can't control. Because there are those people who need their money immediately. There are those who need shares. You can't control that emotion. But company innovations, it's within their management and directors. Then being overconfident. Buying one stock and you have that confidence, this stock will go to this price. But remember, you're not the one controlling the price. There are other factors and other people within the market. So avoid these three: anchoring onto a certain price or a certain target. You're saying until it reaches this, I will not. Investing in hopes and also being overconfident. In NSE, the worst thing you can do is place a trade with that confidence that this counter I'm buying, I know it will go. Check research what they are saying, so that maybe they are saying that counter they can see price going down, and you are seeing the price going up. Remember, research is based on fundamentals and data. Instead of investing now, instead of being trapped by these behaviors, stick to investment goals. We'll come to that next week because you need a small Excel to track your goals. Data, you use data and fundamentals. This you can always get from research. Then regularly reviewing and taking action where needed, either buying more or exiting. Then we come to our own behavior in investing. So why does behavior finance matters? Even those people who are pros in this market, they lose money due to bad emotional decisions. Do you find somebody knows the market? Peter knows market in and out, but when I buy and sell, I'm making losses. First of all, because of fear. You buy umeme and you're fearing, they will be delisted, they will be suspended. Immediately you get fear. Remember, market can go any side. So the following day, price goes down, you want to sell. Then greed. You have bought a counter. Let's say Safaricom. They're giving good dividend. You put all your money there. And maybe that dividend is because of just maybe money they sold a property. Like what happened with Umeme. This money they were just given by the Uganda government. But you want to put all your money in Umeme just to receive that. Yes, there is Safaricom. Yes, they are giving a small dividend, but that's a long-term counter. Then being overconfident. All these affect your choices. So controlling now emotions when you're investing. can lead to consistent and more profits. Because here now you are using data, fundamentals, information, and the knowledge that you have in what you can see in the market to invest. And you're using research from maybe our research team to make decisions. So two biggest enemies in the stock market, one of them is fear. When you fear, you always find yourself selling quickly, too soon. Like umeme. I'm very sure there are people who sold yesterday at 8 bob, 10 bob. Because you want to exit immediately, you are setting a market order, yet there is no supply or demand. So you are being exposed to either a lower price if you're selling or higher price if you're buying. Like, I don't want to use this example. A client comes in, it's post-dividend, it's a share that you know there is issues, and you want to put all your money there. You want to buy so many shares, and you don't have an exit plan. Yes, you get the shares. Then tomorrow, CMA comes and says, actually this counter, this case, the way we are seeing this court case, we'll suspend it in the next 7 days. Price shoots down. Remember, you put all your money there. You fear, then quickly you want to sell. Then the following day, CMA comes and says, this court case, I think it was resolved. They have the money. Actually, they want to give another dividend. Prices shoots up. You now start regretting why you sold. Because you didn't use data, information that is there. You didn't check credible sources, but you used your fear to sell. Again, a stock is low valued. Let me just use Eveready. You don't want to buy Eveready because you fear this counter will always stagnate there. But maybe in news, Eveready maybe was bought by another company which came up with even new good policies, products. And that's an opportunity. Maybe in future, Eveready will rise in price. But you, because of that fear, you ran and bought another counter. Then that counter prices starts to come down. So you're losing a good opportunity. You run to another stock that maybe will never give you gains. Then greed. You chase hot stocks and risky trades. Where you know you're buying a stock you can sell. Always check demand and supply. If you see a counter consistently that one side is always blank, take caution, huh? Especially on buy side. If it is always blank, that tells you it's very hard for you to get people to buy. So don't use greed when investing in stock market, including international markets, even when you are investing in other products out there. Even if it is a RAD you want to buy a RAD maybe somewhere you have been shown and it looks very hot, you want to pick quickly. Maybe when it rains, that's where swamp forms. Then what do? You know, these days the environment can change. It can rain 3/4 of the year. Does it mean 3/4 of the year you never stay in your house? Yet, if you gave yourself some time, you'd have found a proper RAD where soil is good for farming. So never use fear and greed in the market at all. And before you follow anyone's decision, first investigate and also do some research, unless it is coming from a qualified stockbroker and a licensed one. So a good example, Safaricom dips, you want to sell. Yet, when it is dipping, it was just a policy that was introduced that affected maybe M-Pesa briefly. Prices went down. Then, when that is sorted, prices even shoots up. So you sold your shares, lost. And maybe when it's going up, they're making profit, they announce a dividend, so you lose dividend. Or you don't have knowledge on dividend, you want to sell on book closure. That day they are closing books. Remember, you're removing yourself from register. You won't qualify for dividend. So you miss a dividend because you just want to sell. And maybe it's not on emergency. Or there is hype on account of maybe like Eveready, which have stagnated on a very low price. Then you just hear noise out there. Eveready is a good counter. Then you buy, your funds are locked in there. So always look at research and information that is out there. So how then do you control emotions? First of all, have a target buy and sell price in advance. And don't stick to that price. Remember here we said anchoring. Don't anchor your hopes on that price and say, yes, I've set this target price, but I will only sell when it. If you make small gains and you feel it's time to exit, you can exit by another counter. Also use stop loss and take profit orders to remove emotions. This works in international markets because there you can put stop loss and take profit. These are just prices. You say, I'm putting yes to buy at 11, but if it goes down to 8, exit. If it goes up to 20, exit. So you're only putting at the stop loss, you put 8, at the take profit, you put 20, then the price you're buying. It has no those technicalities. If you have been in Forex, you know these. But in NSE, as I said, this is not there. But using your tracker, you can put those details. And then don't trade based on news headlines or peer pressure. So a good headline comes in, Mumias is back in the market. They have been bought. You want to buy the following day when it opens. Yet maybe even the court case have not even been finalized. By the time you are entering, you buy. Remember T+3. The following day, CMA tells you, by the way, this court case will not end today. There is another maybe court case that have been filed in. Yes, the counter will continue trading, but prices will still stagnate at the bottom. So don't trade based on headlines. Or Safaricom comes up. We are starting AI. The following day prices shoots up because everybody is buying on emotions. You want to buy. Yet you have not checked what is this AI they are bringing in. Maybe whatever they are bringing in is what is already in the market. It's not new innovation. It will only be hype for a few days, then it's done. A good example, in international markets, Google comes up and says we have BARD, that is their AI platform, BARD. Price, you see hype, then you want to buy. But who are the brain behind AI? It's ChatGPT. They're just borrowing from ChatGPT to implement. Will people still leave ChatGPT to go to Google? You go to Google a few days, you put maybe you want it to generate maybe some article for you. But then you realize it is just copying from other websites because Google, because of their search engine, they're able to crawl. Crawling means going to other websites and checking what information is there. They're able to read those HTML codes, which basically the content you're putting on websites is usually in HTML format. They're able to read, interpret, then change a few things, then give it to you as an article. And they will show you the links where they have copied from. Yet ChatGPT have been trained to rethink, yes, read from other sources, but rewrite it in other words. Do you still want to go hold on Google? People move back to ChatGPT, they leave Google. You had bought Google shares because of that hype of their AI platform. Then they abandoned that platform, they go to another one. Prices go down. A good example, Microsoft. We used to have a Microsoft App Store where you download from your Windows phone games and apps. I'm also a game developer, so I'm telling you something that affected me. So you have made games you have put on Play Store. It's a good platform. It's trading in international market you have bought, because you have seen they have an app store. What did they do? After competition from Google, that is Android, and also Apple iPhones, they close their app store. What happens to their price? Goes down. If I bought Microsoft shares based on what is happening on App Store, by now I would have lost enough money, because prices usually go down because of just those factors that affect the companies. So if you see a news headline, a company is doing well, first do research. Or peer pressure. People are buying. You are buying because people are buying. You want to buy Safaricom because a friend is buying. Maybe for him, he's buying from dividend he received. You are using your cash. Remember him, he doesn't have any cost. He's using dividend, money he has received free. You have a cost because you're paying from your pocket. So don't buy based on peer pressure and news headlines. And then always have a return investment plan. I know this we don't do, we just buy. Even for your retirement, another investment outside the IB and capital markets, always have a plan. And you can do that with Excel or Word document. Or if you don't have that, if you have a phone, you can do Google Sheets. You can also download Excel, or if your phone have an app called Notes, you can use that to just note what you can be referencing those notes and know before I invest, this is what I'm targeting. I know in Kenya we don't have investment platforms which you can put your goals, but maybe as we grow as AIB, these are some of the things we'd want to bring into DigiTrader. So always have a kind of written investment plan. Hopefully, maybe next week, I'll also be covering some of these so that you know how to create one. You become now a serious investor. Then, why your patience pays than overtrading? One of them, overtrading, let me first define this, is where you're frequently buying and selling. You want to buy today, intraday, buy, sell, buy, sell, buy, sell. Or buy today, you want to sell next, by the next 3 days after it settles. Then you buy another counter you want to sell. There's something you always forget. High cost because of commissions. Right now, we don't have taxes. Taxes are on dividends, withholding tax. So the reason why overtrading have issues, one of them is high cost. Because every buy and sell you are doing, there is commission you are paying. Remember, even if intraday, we are not charging you commission on one side, you might be doing so many trades. So it means that commission keeps on accumulating. It is eating in your profits. Then bad timing. This is when you're trading with emotions. When you trade on emotions, you'll always miss real moves. Let's say you don't like Safaricom. Then they come up with a good innovation. And you say, I will not buy Safaricom because I don't fit them. But remember, this innovation will drive Safaricom prices up and maybe even future dividends. You will miss because you'll miss getting Safaricom when it is low. Then when it goes up in prices, that's when you realize, hey, Safaricom was good, I would have bought. By the time you're entering, maybe that is its highest price and it stagnates there. Then market noise, it leads to bad decisions. There's always a lot of noise in this market. And trust me, you will never miss noise in this market. A good example, what happened with in business data some time back when they said NSE CEO have issues with brokers. That noise went over and I saw people commenting, yet you don't know what is happening on the ground. Actually, even brokers themselves, they didn't know what was happening. But go on the ground, you notice you don't even need to go to an NSE CEO. He's a clean man, he knows what he's doing. But you as an investor, you will interpret that NSE taking over the brokerage, it's like they are moving brokers out of the market. And your panic starts selling your shares. Yet, how long does it take to move NSE stock brokerage from brokers to NSE? It's not 1 year. We have had over 20 years of investing. It would take the same years. Because NSE, they are taking over management of portfolio. I don't know how many billions. They can't do it. Yet, you as the investor, you didn't know what is happening. Maybe it is another interested party that is coming in, but they don't want to come out clear. But the fight between broker and NSE affects you. That market noise, actually always ignore it. Unless something comes from CMA. Any other market noise, just ignore. First do your research. The only noise you need to be worried or information that's coming from CMA is usually final and it is credible. Any other noise you see on news, first validate. Again, you find even traders themselves, they are fighting amongst each other, that Cold War. But one day it will escalate, then you start finding news trading. You want to sell because traders are fighting, but do they affect company performance? No. AIB performance will never affect Safaricom performance. There is no way AIB and Safaricom, they are related. Safaricom is listed at NSE. AIB are just a broker at NSE. So those noise in the market, they might make you make bad decisions, which you can later regret. You sell account and then price goes up. Like what is happening with Umeme. If you have to ask anyone, do I buy or do I sell? They tell you seek the court case. The SG this. But do your research on Umeme. What is happening? What do they do? Yes, concession added. What is their plan next? Go to their website. Is there anything they are posting? If they are still posting things on their website, it means they still continue. Read those articles, see what will happen next. Maybe they are moving in other areas. It means they'll still be listed. Check what Uganda Stock Exchange are saying, because that's where it is listed mainly. In Kenya, it was just listing as a secondary trading in Kenya. Check what is happening in Uganda. Are there plans to delist? If they are not delisting, then why panic? It means they're still trading. However, if the government is of opinion and they say they won't continue in operation, it means they will be delisting. What are the procedures of delisting? We'll come to those as we continue with this series of NSE, so that you know, when you hear a company is delisting, what does that mean? How does it affect my gains and losses? So let's take an example of a long-term thinker. You have two investors. One buys Safaricom and holds for 10 years. They are accumulating dividend, then maybe prices move up. Within 10 years, they have made 8 and 8% plus returns. Because remember, there are dividends that are accumulating. Prices are also moving up. Like, let's take an example. You bought when Safaricom was trading below 2 shillings. Right now, is that? I think there was a time it was trading at 40. We have made so many gains. Then there is another investor who is trading frequently. We are talking about overtrading here now. I'm buying today, tomorrow I'm selling. I come back and buy. I'm selling the following day. Remember, there are fees you are paying. And these, depending on the frequency and the number of shares you are buying, you might find 30% of whatever you have invested is taken up by fees. You miss compounding, where you are buying, you wait for dividend to come in. You want to sell immediately on book closure because prices are up. You miss on that dividend, yet the gain you are making is very small. Remember, there are also fees you are paying. And never be told by any broker there is zero commission, even in international markets. Me, I like being open. There is never zero commission. If there is zero commission, then the price you are getting is not what is in the market. It has a markup. Markup means on the price they are adding a small price, which you can't notice, but it is the fee. It's their profit. So you find a share is costing at 140 in the market, zero market, but here you're buying it at 145. It means that difference of 5 is the cost brought in terms of price, instead of them showing you the actual fee you are paying. That's why in the AIB, we have shown you the cost you are paying. In any product, we tell you in upfront, this is commission, and these are the revenues. So that we don't give you a price, yet that price is not what is in the market. We are hiding fees behind. So, otherwise, how will your patience help? One, dividend will accumulate over time. We did this in our Excel, and we saw how you can do compounding, which then you are investing your profit. Don't withdraw, don't use that money. Then you always have less stress. You never be worried about what is happening in the market. So how then do you build discipline? Invest based on data and information, not drama. When you hear Safaricom have done this, ABR have done this, they invest, this company is sponsoring, don't use drama to invest. Use data and information. You usually gain. Always talk to our research team and our traders. They usually have this information. And for us, as I said, our trainings and information is always free. Even visiting our office, just come, it's free. Say you want to see this person. If that person is not able to give you that information, they will recommend the person you can talk to, and they will go for that person and come and talk to you. Always review your portfolio, but not daily, because then you don't expect, especially in NSE, never expect that huge movement. For international markets, the prices move within even a second, but for NSE, check whether monthly, quarterly, then celebrate small milestones. Don't go telling everybody I was paid dividend. Celebrate internally, maybe buy yourself a phone, then invest. Or you invest in your kids. That is celebrating milestone. I'm coming to what I've just said, investing in your kid. When you receive dividend, instead of investing back in your portfolio, invest in a kid's portfolio. You are growing them as from their young age. When they graduate now to somebody who can be able to trade on themselves, they already have a portfolio. That's a kid who will live in school and they will not even think of looking for a job. Stock market is somewhere you can employ yourself if you already have that money invested. Then set clear goals and goals that you can reach. You say, I'm targeting this dividend. Trust me, that dividend you get, because you're targeting stocks that are giving you dividend. You don't want to say, I'm getting into stock market to just get rich. Trust me, in stock market, you never get rich. If you get into stock market with that thought, you'll always lose. Why? You will buy maybe at a higher price. There is a revis. A small price move, you think you have gained, you sell. Remember, there is also revis and costs on sale. But if you're saying you invest in dividend and keep accumulating to this amount, trust me, it is a goal you can reach. Then wealth transfer. You have built your portfolio. Do you want to leave that portfolio with somebody else whom you don't know? Maybe they are not even your beneficiary. This is where wealth transfer planning comes in. Last week, we talked about how you can pass your wealth to beneficiaries. That video is already in that YouTube channel. When you're investing, and it's a question I would like you to ask yourself when we leave here. You're investing for who? If it is for yourself, if you're saying yourself, ask yourself, if this yourself is not there, who will take over? It's a question I would like you to ask yourself. Who am I investing for? If it is yourself, go and write somewhere yourself and cancel, say, this yourself is not there. Then it means your wealth might go to other hands. And remember, this stock market is very small. It's very small. Even if there are regulations, people can take advantage, go to court, and they get succession done, and they get letters from the court. What prevents CDSE from transferring shares from you to them? Yet it's people you don't even know. They just took that advantage. The only thing they only need is your ID and your death certificate and prove who they are to you. Who can't forge a marriage certificate? Who can't bribe a lawyer to just do that? Who can't bribe even a court to give those? These are things now you start thinking. Do you want to leave your wealth with the people you wanted to benefit from, or do you want it to be there? Do you also want to leave to people, your beneficiaries, and they keep fighting for it? Just go through that video. But today we go even deeper. Why wealth transfer planning matters. One, many investors plan for growth, but you forget what happens after you're not there. I don't want to read that word at the end. It's the word we usually learn from, but it is reality. We can never outlive ourselves. Then what happens? Yes, your portfolio have gained, but what happens? Without a plan, your shares, either your insurance, saving plan, your pension, in most cases can get frozen in court, especially when the court realizes there are issues. Remember, once a court freezes that, broker cannot transfer. Even if your beneficiary comes and proves with a photo, this is my dad, this is my mom, we can't transfer without court documents. I did that, how you can transfer shares from a deceased to beneficiaries. Always have a plan. And planning ensures your family inherits smoothly. You remember, you're inheriting for your family. Even if you don't have maybe kids, you have brothers and sisters. If you don't have brothers and sisters, you have relatives. These are the people who held your hand when growing up. You need the wealth to go back to them, not to somebody like Peter whom you don't even know. You need your wealth to go back to the right beneficiaries. And mostly, if you have kids, your kids. If you don't have kids and you have a spouse, you want it to go back to your spouse. If you don't have a spouse, you want it to go back to brothers and sisters or your parents or your grandchildren, great-grandchildren. You want your wealth to remain within your family, and if you're generous enough, to a few friends. So you may have different options. One of them, you can set up a trust, or you open a minor account, the same way I've said about kids. But remember, this doesn't affect your main investment. So what is a trust? It's a legal tool that holds or manages assets on behalf of others, your kids or your spouse. Let's take an example. You have a parent who had shares. You have brothers and sisters. These parents have passed. What usually happens? You find there are people who don't want to sit down and share this wealth. You always have that conflict. One time, then you and brothers and sisters will not be there. Your children, again, they will say, our parents didn't follow up on our parents' properties. So why even bother? They now start having fights. Their children after them. What will happen? Eventually, you'll find one greedy person taking over everything. Then they disinherit the others. But with a trust, it is holding on behalf of other. So you register a trust and make sure all assets are registered under that trust. This could be even lands, houses, car, whatever assets you can register as trust that holds assets on behalf of others. Then when they decide how to share, then they can be distributed. Why? Nobody can come and disinherit a trust because it's not an individual you are disinheriting. Then you name trustee to control it, people who can manage. And mostly you can even, if you don't want to register a trust, then you can appoint administrators of the wealth so that those administrators, the assets are registered in their name. When you agree, they will distribute. But then these are individuals. What can they do? That's why a trust is the best option. And it is useful for children, vulnerable dependents, and breaded families, because that's where conflict comes in when sharing wealth. A trust is the best. Even if administrators is the easiest, if you can do through a trust, the better. Then minor accounts, you open a CTSE account for your children. I went through it last time. It will be with kid's name, but a guardian is a joint. You're opening a joint account. You can't open through DigiTrader. This is manual. It's a joint account between the child and the parent. Then you make sure in the bank, you also have an account in the same names. You start teaching your kids very early to invest, and mostly on how to receive dividends. Remember, when you open a Jabo Junior in the bank, they usually give you that big bank, that elephant thing, to help you teach your kid how to save. They drop coins, then one day you go with them, they open bank accounts, put that money in the account. It's the same thing you're doing with the shares. Let them put in that big bank. Instead of taking it to the bank, come with them to the broker account. When you're in the bank, deposit in a broker's account. Then show the kid how to buy shares that are declaring dividend. And use simple analogies so that they understand what they are doing. Within a few days, the kid have catch up. And now they'll be using that money to invest school fees. Let me just check. I can see there are few. Let me see whether it's okay. Let me continue with this training. I think it's a client. So you are teaching your kid how to invest so that when they are graduating to an adult, they already know how to invest and they already have a portfolio they are coming to continue building. At some point, you may find that portfolio supports them in their lifetime. They might not even need to be employed. They come and start trading and making money in the market. That's a good example there. I don't want to go into details of these. Then, when you're investing, as we said, you want your wealth to go to the rightful beneficiaries. The first thing is to have an investment will, and this, you're not subdividing your property. It's not like you're anticipating you will die. No, you're just saying, you are clearly stating who will inherit what, so that in case of anything, your children will not be fighting for your property. It is there in writing. For shares, unfortunately, you have to do a written will. It's not like RAD. RAD, you can say, the property I have in, let's say, Makueni, it will belong to my child called Jane. So what you do, you say the title to be written in the name of this property belongs to Peter Chege in life interest of now that kid. It means I'm holding that RAD where I'm alive until I die. When I die, it passes over to that child. So never write your title in your own name alone. No? Remember, the kids will come and fight. Just subdivide. Then each have a title. Then write it in life interest of your kid. They don't need to go to court or do. They only need a few documents they present to the registrar of RADs, and it is transferred to them. But if you leave it open, then they, first of all, they have to fight, agree who will get what. And remember, not everybody will be satisfied. They'll feel like you sideline them. For shares, what you do, you just appoint beneficiaries. On the form, account opening form, even CDSE, I believe they ask for next of kin. Just make sure you have indicated. And as market grows, we might go to that level where you're able even to tell which beneficiary and their share. If you go to pension, if you have been in pension, especially with, and I'm not marketing them, EN Wealth, and if you're in SACCO with Muhasibu, when you're adding beneficiary, they always ask you, what percentage of ownership does each beneficiary get? It is you now declaring. When they come to share, then they would only check those records and distribute equally. You will not have, your beneficiaries will not have any issues. And therefore, this helps you avoid family conflicts and long court delays. Remember, family conflicts are the ones which lead to other things you may not want to talk here. Again, I've said CDS form, always appoint next of kin. So this will ensure your stocks go to the right person. But remember, for shares, your beneficiaries have to go to court and get a few documents. I went through them. I don't want to go into details. Once they have that, transfer is very easy. They just open CDSE account, we transfer shares, or the court will have pronounced who to be paid. So you sell shares and pay whoever is written in that document. We will rely with court instructions. So without your beneficiary, your shares may be frozen and can take so many months. Remember, nobody can touch your shares if you are dead. The best thing is they sell, we credit to your account, we will pay money to your bank account. If they don't have access to your bank account, then it means the bank, after some time, they will send it to unclaimed assets. Then unclaimed assets, their work is to link those assets with the rightful beneficiary. That's the only time your beneficiaries will know you held shares. Do you want to go through that process? Remember, unclaimed assets, the number that maybe you give to the bank is your own number. Maybe that number was even thrown away when things went haywire. It means your beneficiaries will never get shares. So then how do you create a legacy portfolio? By just having a long-term investment designed to benefit your children and grandchildren and great-great-grandchildren. Build it with low risk, high-quality stocks. That is, stocks that are giving dividend and the ones that are appreciating in price, so that even them, they continue accumulating dividends. Those are just a few examples. So steps in creating a legacy portfolio, you decide on the goal. What are you targeting? Open a minor or joint account. These days you can open joint accounts with your spouse. Joint accounts is where you're opening two people and invest monthly. Then reinvest dividend and make sure you keep on tracking. I think this we have done. And for kids and even your spouse, teach them how to invest. Then there is investing for kids, spouse, and chamas. For kids, you just open a minor account. As I said, you're opening with a guardian or a parent, and use that dividend maybe to pay fees, or use this dividend to fund Jabo Junior account. When Jabo Junior have interest, that interest, you turn it back to stock market. Then for spouse, you just create a joint investment goal. You open a joint account. Remember, you have your own individual account, both of you. Then you open another CDS account as joint. Then you can decide, in my personal account, I'll be putting 100,000. Then for joint, you can put the remaining amount, maybe 20 or 50. Then the partner puts top up. Then you build a portfolio based on that. Why am I saying this? You need your partner to know you're investing. You don't want to wait for unclaimed assets to tell them you had a bank account. Then they are going to bank, they see there is a dividend that have been set by Mumias. They are going now to Mumias, they are told to go to registrar. Registrar sets them to broker. Broker now starts to tell that story of succession. Go to court to do this and this. Do you want them to go through that? Let them know, especially kids. And it is useful for retirement, or if you want maybe to buy radiator or creating an emergency fund. Remember, shares you can sell. The IB have given you an opportunity. When you sell, you can request to be paid early. So for Chamas, you put money. You see the way you contribute on Chama, then you just decide we are giving one person. It doesn't help that person. Actually, what you are doing, it's like you are accumulating some money for let's say for the several months you have contributed in Chama for yourself, then you put it in an investment. It has not helped you. But as a Chama, if you decide, let's open a Chama investment CDSE account and a Chama bank account, you can buy shares, then dividend that comes through those shares, they are deposited in that bank account. Then you can withdraw and share as profits as Chama members. But remember, follow the registration process for Chama, so that you avoid dramas later. Remember, you're investing with people whom you may not know how they can react later, especially where money is involved. So you're about to finish. Then there is a portfolio plans. Now this is how you can plan your portfolio. Let's say you have 10,000 as a starter. Just choose 1 or 2 dividend stocks. Don't try to buy every stock you see in NSE because it is giving dividend. You will lower your dividend amount. Grow your portfolio until such a time that it is giving you enough money now to buy those expensive stocks, and reinvest your dividend to grow this 10,000. And you can decide I'll put 8,000 in stocks, then money market fund is an option. When you come to fractional shares, you can put that. If you have decided I will use 50,000, then balance growth stocks, some dividend, and maybe some in money market fund. In international market, you can have board fund. There are those ETFs that trade for boards. If let's say it's 100,000 and more, then you have a lot to diversify in, including going to international markets and buying even the expensive stocks which are giving good dividends. Now you have opened a Chama. There are always group conflicts. In family succession, there are always conflicts. You need documentation. Then how do you deal with them? One of them, let's start with the problems that are there. Disagreements on goals. Chama, one wants you to invest in Safaricom. You want the Chama to invest in, let's say, Umeme. So you're disagreeing on where to put that money. Contribution, you find even if your spouse, we say money is the head of the family. You are told you put 100,000, you put 10,000. Later it will come to catch up with both of you, and you start fighting. Especially when you're selling and you want to share those profits. Maybe you want to invest in different, because everybody have their own investment goals. Lack of transparency. You have put in money, but you don't know where it's going. There are no statements. There is nothing to show that your Chama money was put in. Succession. There is no transparency on who is getting what. Documentation are not there. Members passing away without will. For a group, always have that will. In case you're not there, who gets what? So these are some of the problems you find, especially when you're investing as a group. So solution, one of them have a clear constitution for Chama and even family groups. Administrators of that estate, we call it estate, or assets held on behalf of other members for a deceased, it's called estate. Everything, including land and everything else, have a clear constitution. Processes, how you share, who gets what, who controls what, how we will be meeting and how are we making decisions, have that clear constitution. Then have monthly reports, like you can create Excel or Google Sheets or a book where you write, but a book, remember, can be stolen. Then assign succession rules. Who takes over after death? Like if you have selected administrators, if they are not there, who takes over? Remember, even administrator, it's not necessarily they die. They can decide we are not interested in inheriting. They move out. Then always get beneficiaries registered. Whether in writing, for a Chama, always have in writing and attach it on broker form. Make sure it is scanned and uploaded on your account. For married couples and trusted families, make sure your spouse or your kids know what you're doing. So with that, let me come to Q&A. I hope it wasn't a lengthy presentation. Let me go back to the first slide so that you can take my WhatsApp number in case you want to reach out to me on WhatsApp. I'm available any time of the day. If it is night, if I get time, I respond to you. Otherwise, early in the morning, I respond. Email, that is the office email. And I hope you're not tired. Let me see. It's around 3. Let me see. We take questions. Thank you. So go through Q&A quickly. Let's see where we were. Where were we? I think that's it. Will you be able to receive dividend if you tend to sell your shares before payment day, but after book closure? Yes, you receive. The only time you won't receive if you sell on book closure. You can sell after book closure. But why then sell a share that is giving you dividend unless your goal is to buy another stock? Remember, after payment is done, the counter is no longer ex-dividend. Prices fluctuate either way. They can go up or down. That's why watching prices is very important. I'll share the Excel spreadsheet, not on the charts, not now, because I need to prefill it, do instructions on how you need to work on it, because I would want you to be empowered to use that Excel spreadsheet on your own. I will share everything on our social media, including WhatsApp group and also WhatsApp channel. But on WhatsApp channel, now that's where I will be posting instructions. And where is the corporate screen? I hope you're asking corporate actions. Just download price list, NSE price list from our website. Scroll down to where there is corporate actions. What happens when you own very few shares and dividends are paid? Then you get like 1070 in dividend, which you never receive. If it is bank, you may not receive, because remember they charge 50 for EFT. If it is M-Pesa, you receive, but very small amount. If you don't receive, follow up with the registrar. Most likely, the reason why you have not received is because you selected bank, yet the amount is very small. If it is M-Pesa, I know you will receive. Or if it is M-Pesa, then the details you gave when opening accounts are wrong. Always validate with the broker, then contact the registrar. But your dividend will never be lost. It will always be the registrar. They can only sell it to unclaimed assets after some time. I'm interested in buying dividend stock with Stanbic. I did shared right. Is that if it is Stanbic shares, they usually give dividend, but right now I think it's only the 3 stocks, Safaricom, Williamson, and Captura, who have active dividend. When Stanbic they announce, it will be there on media and also on our social media. And it will also be in corporate action section on price list. But if you're investing with Stanbic bank, maybe their custody, you just go ahead and buy shares, but make sure you don't sell on book closure. Given the stock prices are low before announcement date for dividend, it is important to consider this and even buy new dividend stocks from extra cash, given you are assured of getting dividend from already existing stock. Actually, when they announce dividend, take that time to start buying stocks, because usually the prices are low. But remember, even if you buy at a higher, not targeting to sell, you are targeting to take dividends even in future. But if you want to take dividend then sell, target early enough. Also, you can check historical prices. Check out the companies have been announcing dividend which month. Buy when prices are low if you're interested in getting out. Also, if you are reinvesting your dividend, you can top up with your money. Asking where? The corporate action screen. Again, these I've said in price list for NSE, just scroll down. You find that corporate actions. How do I transfer cash to my CDSE account and how long does it take? If you have opened a broker account, like for us, you just use our digital platform, EIB DigiTrader and also online portal. You got to open new trading account, you submit your details. Once it is opened, you have option of depositing with M-Pesa. You can do it directly from the app at a fund transfer, or also on our portal. That is automatic. Once you put in your PIN, it's credited immediately. However, you can do bank deposit, but remember, for bank, you don't know who deposited. You need to send that deposit slip to our email. You can get our email address on the website, or you can send a message through the app. There's somewhere it has contact us, and send it from there. I can't even remember the payment method I indicated for payment dividend. How can I know? Moses, just send me a WhatsApp with your ID number. I'll respond to you with whether you selected M-Pesa or bank. And since I may not be certain it is you I'm chatting with on WhatsApp, I'll just tell you it is this bank. If you know it is this bank, you already know. If it is M-Pesa, but if I can confirm it's you I'm chatting with, I can disclose further details. Remember, I don't want to expose client. My account went dormant. How do I recover? Again, send me email or WhatsApp. I'll send you instructions, or the email you can send to feedback. Feedback at aibAccessAfrica.com. Send your ID number. You send you forms if it's not fully KYC compliant, and the rest you leave to us. It's a one-day thing. Your account actually immediately we receive forms, it's activated. Do you have an app? Yes, we have an app. It's there on Play Store. It's called AIB Digitrader. It is the first of the kind in the NSE market. We are the first one to launch app for trading at NSE, fully automated with other products in, and others are coming soon. I've shared that link. Just click on it. You can download directly from there. Do you trade on clients' behalf as a fund manager? No, we don't have a fund manager license, and as stockbrokers, we are not allowed to execute trade on your behalf. Even fund managers, they are not allowed to trade on your behalf. What you do to a fund manager, you give them money. You don't care where they invest. You don't give them instructions. Sorry, they don't use your money to buy anything they feel like for your account. You put in an investment correction account. Many of you, it is a fund manager to decide where to invest. Then they give you returns in form of interest. For a stockbroker, the law does not allow us to use their discretionary mandate. They are called discretionary mandate, where the broker is the one to decide on which shares to buy. We are not allowed by the law. Orders that have to come from the client, either through the app or via email, if you have signed email mandate. Do share prices affect how you earn profit? Yes. If you buy raw and you're selling when prices have gone up, you're making profit, and you have to do the actual sale. If you're buying high and you're selling when prices have gone down, then you're making losses. But you have to execute that sale trade. If you have not sold, you have not lost your money. If it gains then back to 25, you have gone to the position you are in. If again it exceeds this to 40, you have made profit. Again, for you to realize this profit, you have to sell. If you don't sell and the counter goes down, again, you go at a loss. So you have to execute a trade for you to gain profit. If you're making losses, you have to sell at a loss. You have to make that sale. Execute a sale order. Then there is a follow-up question. If I buy more, am I gaining or losing? Again, always check portfolio valuation. It will tell you whether you are making profit or loss. If it is a profit, you can decide to sell. If it is a loss, then don't sell. Is it possible to buy passboards, FXD and IFB in secondary market? Yes, we are licensed. For those who don't know, FXD and IFB, they are government bonds that have been floated by the government through CBK. Board is a loan you're giving to the government, then you agree they be paying an interest. That interest is called coupon. So what you need to do when it is listed, it's called primary. You buy directly from CBK. After that, remember you need if you're selling, you need a buyer. If you want to buy, you need a seller. It's not like NSE shares where you can see who is selling and who is buying. Broker have to source for you so that you get best rate and interest. So that all those are negotiated on your behalf with the seller. Remember, bonds is not like shares. They're not listed somewhere where you can see prices. That's why you need a broker. If you need to talk to our boards team and buy any board that is currently trading at CBK, get in touch with me on WhatsApp. I'll link up with our boards team. For us, we always are open to everyone. For WhatsApp, I think that I shared it as also this for group. This for group. There is a WhatsApp channel. Remember, for group, we only that's for research related. Channel is where I'm doing actual training. All this we are doing, I'll be posting on the channel, and it is there. Just follow. You don't need to join. For the group, you need to join, because our research is mostly exclusive to our client. But for my training, it's open to everyone because you need to learn what you're getting into. That's why we are posting it on that channel, so that you run ahead of getting into stock market. What are some of the risks associated with buying cross-listed company like Bank of Kigali, given its dividend? If it is cross-listed, cross-listing means it is trading in Kenya and trading in Kigali. Unless you are Kigali resident, that is, you have a CDS in Kigali and you have a CDS in Kenya. But again, there are no risks. If it is giving dividend, you still be paid by their registrar through the details you give at CDSE in Kenya or CDSE in Kigali. But the other risks are issues with the company. Let's say Bank of Kigali have issues with the government of that country. Then if you are not following news in that country, then it means you'll be exposed. That's why if you are buying a counter that is cross-listed, you need to know what is happening in the other country, so that you're not left with the issues of Umeme. I know most of people who bought Umeme, they didn't know there was an issue with Uganda government. So if you don't follow up, then at one point you'll be stuck with your shares or you are locked. What's your take on transcendental shares? Again, for this wait for CMA, there is nothing you can do now. If it is already suspended, it is suspended until that court case is resolved. Once they resolve, I think with Equity Bank, they will either come back and continue trading, or CMA might decide to suspend it the same way they have done with Mumias until amicable solution is found, so that you as the investor, you don't lose. Extend your notes. That's why we have that WhatsApp channel. I'm actually doing blog posts for all the notes I've done. There's a blog post now which is detailed, so that you're able to follow up. This is because of presentation. You know, again, if I put everything on the slide, I'll be looking like I'm reading, and it will not only become cumbersome on your side, but again, even reading through the notes, you won't understand. That I put it in point form, but I'm continually doing it in form of blog posts, which I'm sharing in a WhatsApp channel and Telegram channel, so that when you have time, you can go through those blog posts. What is a defensive dividend stock? Again, a defensive dividend stock is a stock that continually gives dividend while still appreciating in price. Its performance is still it's a growth stock, but that continually giving dividend. What is the difference between settlement date and early payment when making withdrawal? Settlement day is when we expect DSE to pay us your money so that we can pay you. That's the day we receive money from CDSE to pay you. Early payment is where you request, instead of waiting for that settlement day, you want to be paid the day you sold. Let's say you sell your shares today. We can only pay you on Tuesday, because there is tomorrow, Friday and Monday. We receive your money from CDSC on Monday. That will be the settlement day. So we can only pay you on the following working day, Tuesday. Early payment is where now you sell today and decide, let me be paid today. But it will come at a fee, 5%. Huh? Do you also broker in international markets? Yes. Join us this Friday. We'll be taking you through international markets. Huh? Friday is for international markets. We do it. Huh? And details are there on our website. How can I add one? How can I add more different stocks on my dashboard? You just buy the normal way you buy. You just decide, I have Safaricom, I have equity. You go to, I hope it's not buying because you have not clarified dashboard. I assume it is your portfolio, but if it is on your watch list, there is somewhere it says add script. Just click on that, search for that stock, tap on it, then save. But if it is adding on your portfolio, just buy normally. If it is adding on your app or portal, just click on add script, or where it says search script, search for it, make sure it is ticked. If it just have a plus, tick on it to add a green tick, then you click save. And then after you exit that screen, it is automatically added. How can I buy ETFs on DigiTrader? We only have two ETFs, Absa Gold and the one that was listed today. They will be available on DigiTrader. When you scroll on that list, it will be part of that. Gold is GRD. Then the other one, I think it starts with the S. I think I may need to check that code. And you buy the normal way you buy shares. Actually, what you're buying is the shares that are within that ETF, but buying small units, which you are buying as one unit. Will KQ appreciate? In the past, it has reached up to 45. KQ, I think, again, it was politics of Kenya Airways. Until those politics end, then it will always be affected. And remember, it's affected when mostly by our local politics and also international politics. Local politics are which one? Gen Z demos. You know, when they suspend travels, they're making losses. When we go into election, they suspend travel. When one country bans our airplane from landing to their side, that's Kenya Airways. Remember, they are making losses. But again, it's politics. But hopefully, when politics are removed, like the same way KPLC did, then you'd expect some gains. Is it possible to completely live off stock trading? And how much capital would one need? Oh, live off stock trading. Yes, if you have a good stock that is giving you frequent dividends. The capital, it depends on you, how much you want to invest. And that Excel that I'll be sharing is something you can use. Because then, if you're able to package your portfolio such that every month you're getting dividend and some good dividend, then it's something you can live off. There are people who are getting dividend like this a salary of 100,000 in dividend only from different stocks. But again, you have grown your stock, your dividend, your stock or your portfolio to some good level. But given the provided online EIB access platforms are not open platforms, do you feel there is need to have trading friends or partner or even a mentor? If so, I would like to get trading friends from this forum. Is that okay? I've been trading for just 1 year. If you join that Telegram channel, if you follow that Telegram channel, it allows you to make comment. If you go to comment, it allows you to join another group. That group is open for discussion. Remember, on WhatsApp, we don't have a way of linking it to channel. That's why we have not opened a Telegram group for discussion. The other groups, so AIB, they are closed because those are research. This one we research. But the one that I've shared, Telegram channel, you join Telegram group linked to that channel. It's called my wealth guide, KE. That I've allowed discussion, but don't share your personal details. There you can, you are free to discuss whatever you want related to the market. Let's help each other. Even me, I'm an investor, even if I'm in AIB. How long term is long term? As long as you don't say I will sell tomorrow, that is long term. As long as you don't say I will, and underline the word sell, then if you are not selling, you are long term. You are holding your stock, then you sell when you need money. You can even decide to leave it there. That is long term. Short term is where you're frequently buying and selling. We'll come to these terms next week. Where you're buying today, maybe after 1 week you have sold. Those are short term. And short term always have higher costs, leading to losses. Yeah, there is that example you have been given. But it also depends from person to person, as I told. Because I can decide I want to hold my portfolio up to a certain point. Can one name a trust fund as a beneficiary in CDSC? Yes, you can. At the next of kin, you can fill the details of that trust fund, but make sure you also attach documentation for that trust fund so that we know who are those. Or you just do, when you are doing the form, you can just do a separate letter and attach. But remember, for shares, either way, you still have to go to court. We only need this because we might need to verify details. That whatever quote I've given is what we have on our side, and it's also good for protecting your your beneficiaries. I'll share this Excel sheet. Don't worry. Would you advise bank or M-Pesa for dividend? I think M-Pesa would be my choice because you receive the same day it is released. For bank, you have to wait for 2 days. Again, it is done as EFT for bank. Charges are also lower. If you have a bank and it's a savings account, you can go for it because when the dividend comes in, you can then accumulate interest. If it is not a savings account, then I would advise on M-Pesa because you receive immediately on M-Pesa and credit your trading account and start trading immediately. Given that it takes about 3 days for trade to settle, who will receive the dividend for trade that occurred on book closure date? The buyer or the seller? It is the buyer. What happens on book closure as a seller? Let's first understand what is used to pay dividend. It is a register. That register have names and bank details. It is a list of the investors who are in CDSC who hold those shares and their bank details. So what do you do on book closure? As a seller, you're removing yourself on that register. Then the buyer is added as a new investor. So when they are setting that register as a seller, you are not there. So it is the buyer. That's why we advise on book closure date, don't sell. That is on or before book closure. Don't try to sell. Sell after. Because they use the list at that day. The people who are in that list are the ones who are paid. Can we be getting earlier updates about companies which are about to give dividends and how much they are giving before book closure? This one you can get on our website at the price list. But again, on that WhatsApp channel and Telegram channel, because I'm the one running it, I'll be posting this because I need to tell you this account is giving dividend. These are the next dividend you can target. There is a question, have a list of for dividend received and how can I know which company have given me the dividend? Well, this one is tricky. You only need to check your portfolio, the shares that you have. Then you can check their registrars. They are there on our Telegram group. Then you can contact them if you are certain you have never received. Otherwise, what you need is to track your dividend backwards. You go to price lists on our website because they are there. You start opening each at a time and check whether those counters have issued dividend. That's where now this new Excel you'll be doing will help you now resolve some of these issues, because now you have list of the shares which have paid you dividend. Otherwise, the only way is to contact the registrar. But again, they'll ask you which company. So you only need to know in advance which shares you have and whether they have declared dividend and whether you have received it either on M-Pesa or on your bank. The dividend yielding company you have mentioned is because their dividend are due soon. Because other stocks like Stanchart also have. Many companies declare dividends and they have good dividends. But again, remember you have to check when they have declared and their book closure. Thanks for that, Paris. It's not just these companies we have seen. Like maybe in a few weeks' time, other companies will declare they will be added. And those ones which have already paid, they will be removed from that list. That's why you need a separate Excel tracker so that you have a history of dividends. As a short-term trader targeting capital gains, given the current political temperature, and you are advised selling towards 2027 general election and buying when they hit raw numbers. That's one strategy you can use if you have made profits. But again, it's not necessarily shares will go down because of elections. It all depends on the political mood. Right now, it's because people are already affected by the economy. Things have gone up. Most of people don't have jobs. So out of that, we call emotion, that's why we see people reacting. And they are reacting because politicians are also inciting us. In 2027, things might be different. It will depend on who is running against who. They might be friendly politicians when you find there are no politics playing around. But again, it's something you can do, but it's not necessarily the market will go down. If it is dividend stocks, don't sell. What's your take on KPLC given the recent gains? Would you advise buying when price comes down? Yes, you can buy. KPLC is a good counter. But again, hopefully politics don't go back. But again, I don't want to disclose a lot of information, but you can read in between lines. You can read in between lines. Don't want to say anything. Staki Subaru ikuja. Staki Subaru ikuja. I hope you understand what I mean. And I don't want to give information then I'm quoted. But you can read in the line. What have happened from the time prices went up to date? If you have not read in between the lines, then you need to do a lot of research in this market, but it's purely politics. When I said Subaru, I know you have picked signals. I don't want to disclose anything. I don't want to be quoted. I know bloggers can go and quote, Peter said this and this and this and quoted this and this. I don't want that to happen. I created an account yesterday evening, but I have not funded because of some various issues. After how long will it be considered dormant? Maybe you can let me know on WhatsApp what are the issues. But if you have not funded, if it is a new account, it will not go to dormant. Only if you have traded. If it is a new account, it doesn't go to dormant until you fund. But again, don't be worried with dormant. It's just submitting your KYC, we activate. Maybe if there are personal issues, then you're free to first handle. Again, don't just get into the market. You are getting to make money. First, sort out whatever is there. If it is the IB issues, please let me know on WhatsApp. I will follow up and make sure it is resolved. You said CMA compensates when company delist. Do they compensate based on the last stock price, or what criteria do they use? It's not CMA who will compensate. CMA will issue guidelines on how it will be compensated. Actually, it is the company. Like Umeme, they might be told offload all your assets, sell your whatever office you had, everything you had, use that money to pay investors. Remember, when you are buying stocks, there is something called investor protection fund. It's a very small fee you pay. That also forms part of that. But how rare will you find a company delisting and they go with your money? CMA cannot allow that. That's why Mumias is suspended. You can always see it there, but you can't trade. TransCentury is the same thing. Until they sort their own issues. If they are delisting, then the mostly is takeover. The company that's taking over that company will announce what they will pay you. If CMA agrees with it and it's okay, then you as the shareholder, you'll be told what to do. If you don't want to take that fee they are paying you, you'll be given an option to sell. They will always be a widow. You are told maybe within this one month, make a decision. If you want to sell or sell to the market. If you want to take that money that will be paid by that company, then wait until the last day. Otherwise, you can never lose money in NSE. You can never. Take it from me, you can never lose money in NSE. Why? Broker never hold cash for you when you buy shares. They are converted into shareholding in Safaricom. Those shares are held at CDSE, not with the broker. CDSE can never go down. If broker goes down, you just need to go to CDSE. They will tell you how to move from that broker who have gone down to another broker. Shares doesn't change, valuation doesn't change. Remember, market is still continuous. If broker have and they have gone down, they are required by the regulator to pay you that money. Is there a way I can change how I receive dividends from my bank to M-Pesa? Yes, just get in touch on my WhatsApp number. I'll send you the forms you need to fill in and the email to send to our customer service manager. Then they will process in CDSE. Do you consider intraday trading risky, and what are the risks? There's very risky. Remember, this is like betting. You're betting the prices will go up when you buy, or if you have stocks you have sold, you're betting prices will go down, you buy low. What if they don't go into your direction? They go the other way. It means you are losing. That is if you're doing a counter trade. If you just buy intraday and you don't do anything, settlement is just normal. So there are no risks. This comes in when you're buying and selling. Remember what I said? Frequency of trading. You're buying, selling. They are trading fees. Even if we are giving you rebates, remember price difference might play against you. And again, NSE is not volatile, like international market where price fluctuates a lot. Can one edit an existing account name and add second person to make joint? No. Let me explain account names. If you open your account with wrong names, wrong ID number, wrong date of birth, wrong gender, those you can't edit in CDSE. The broker will be forced to close that account and open another account with the right names, right details, then transfer shares from the wrong account to the right account. That is the process. For a joint account, we can't convert a single account into joint. You have to fill in forms. So you have two accounts, an individual account, which you are investing as yourself, and a joint account with the other person. Telegram channel. Let me share again. Let me get it quickly. Copy link. So Telegram channel, just log out one post, click comment, it will ask you to join with a group if you want to join the group. WhatsApp channel, all these two are for trainings. Training on capital markets, that is everything offered at NSE. Other products are offered in international markets. Even Forex, I will also be training you on Forex. But remember, Forex is very risky. Please, when we are doing Forex, I would like you to be very careful with Forex. Understand the basics, play with the demo account. Once you understand, now you can go to real trading. It's very risky, but very profitable. Same as CFDs, cash for difference, where you are not buying shares to own, but you are buying to speculate on price movement. So you buy when it is low and it goes up, you sell. But remember, there's something called leverage. It's like you're trading on loan given by the broker, but you pay back. If you lose, remember you're losing that loan and you have to pay. Then price movement, if it moves against you. So you only need to be very careful. You don't lose your money. So I'll also be training you on that. Another investment product like pension, how it works, circles, how they work, because those are so many areas you can make money. If I was to tell you how much I've saved on my pension, you'll be shocked. For just 14 years since I started pension. And I started with 3,000, then the employer backs up with 3,000. Right now, interest itself, if it was somewhere I would withdraw, the interest is more than my salary. The interest that I'm getting. So pension, again, you are targeting your retirement. And all investment products, because we would want you to take opportunity on all investment products. By the time you are retiring, you have multiple sources of income. Let's go. I think there are a few questions. I've shared that. What is the share price of Umeme today? I will check that. Any comment on ARM at the river mining? Was it a return back? I may not be able to comment on this. I would request you check on our website whether there is something that have been done by research. Let me check Umeme. Market is closed. Hopefully they have not cleared prices. Let me just confirm how it was trading today. It's 14.20, still within the price. And again, it looks like it is going up. Hopefully it can go to good levels, back to somewhere you can exit and make some profits. I'll share the Excel spreadsheet. Thanks for the training. Welcome. What happens post trade past 3 p.m.? Can we still? Yes, but they are they are called off-market orders. They'll be submitted the following day, very early in the morning. Our platform allows you to place orders every day, anytime, 24/7. But trading only happens between 9:30 and 3 p.m. when market is open. Now, between that period, you are placing orders directly at NSE. Any other time you are placing, we hold them briefly. Then when market opens, we submit them. Yeah, training for Forex I'll be doing. But again, I want to make a disclaimer here. It's very risky if you don't understand what you're getting into. Thank you so much, Nyawera, Berin, and the rest. And I think with that, I would assume there are no more questions because of time. I'm also tired, all those hours. But again, I feel happy when I see you investing and making profits. I would like to see you make profits and invest for future. We are not investing short term. We agree. We are not investing short term. It's long term. Not short term, long term. I know there is that word you're waiting for me to say, but I don't want to be quoted. I'm saying short, not short term, TERM, long term. We are holding for our generation. By the way, that's how Wahindis do. They invest, and I hope there is one person from that community. That's what they do. They buy and hold. You never see them sell. Then they pass that to their children. That's why, Albert, I don't want to say what you're saying. That's what they do. They buy, hold, pass to their children. That's why you never see a child employed. They employ themselves when they are young through these investments. So let's even us do that. We learn from them. and we invest for our future. Thank you so much. Let's meet on Friday for international markets and next week, Wednesday, for NSE trading. And if you have any question, reach out to me on WhatsApp. And the video I'll be sharing on those two channels and also on our social media. Again, if you have my number, if you have not picked it up now, you just go to that YouTube channel. The latest 2 videos I've done, it's there. It's only that in the other videos I had edited, just to remove a few slides. I will also share everything Excel, fully filled with details so that you can follow, and also a template now that you can use for your own, and notes on how to fill that Excel. And not just that Excel, again, there are so many Excel templates I will share with you, and you realize investing is a career. It's not just putting money and buy shares. It's a career, you start building for yourself and for your kids. Thank you so much, and allow me now to stop there. Let's meet next time. Thank you so much, and I appreciate your time.